we are almost full house now. I think we need to, everybody else has to shift to YouTube.
Sir.
Yes, certainly, sir. So,
Already, I knew that. Yes, sir.
with the permission of the chairman, North Zone, the presence of the Secretary, Jain Arora ji, the chairman of the GST committee. Sir, am I audible properly?
Yes, yes, you are very much audible, ma'am. Yes, perfect, ma'am.
All right, all right. So I welcome all the persons who have joined today for this seminar today on the topic which is going to be taken by none other than Abhay Desai, sir. And sir, we welcome you on the platform of AIFTP North Zone. And he's going to throw light today on the topic how to reply to show cause notices issued by the state GST authorities. Sir, first of all, one of the very eminent topics which has been very prevalent topic nowadays, which has been chosen by our chairman, CA Rajender Arora ji of GST Study Circle, AIFTP NZ. And of course, everybody wants enlightenment from your side on this topic. So with this, CA, I hand over the mic to CA Rajendra Arora ji for your kind words, sir.
Thank you, ma'am. I welcome all the participants. I thank the chairman, Advocate Sandeep Goyal ji, North Zone, and Secretary J.R. Jain ji, North Zone, for giving this opportunity to this study circle and its team. And I also thank Advocate C.A. Abhay Desai ji from Vadodara for kindly consenting to our invitation for being present here and share his knowledge with our participants. I also thank all the participants, all the senior members of the federation, all other. I could see A.K. Srivastav ji also joining the program. I don't know whether he is here or not. If he is here, sir, kindly put your camera on. So I thank all the participants and for this wonderful, overwhelming response, which we already were imagining, looking at the Abhay Desai sir's fan following across the country. And now I would request the chairman AIFTP North Zone for his directions and words of wisdom to all of us, and then we can start the program.
Rajender ji, thank you so much for your kind words and for actually initiating this program. This was all thought, conceived, and now being executed by you, and of course the entire team of North Zone GST Study Circle. Not taking too much of time, I think all busy professionals have actually taken out this time to hear to our worthy listener, Shri Abhay Desai ji. We had been actually waiting for this. Anybody to whom I have talked about this webinar, they had shown such a keen interest. I am so grateful to him for having spared his time. Now I request Shri Abhay Desai ji. In fact, I will go back to Aanchal ji for taking the proceedings further. I will not take too much of time. Thank you so much.
Thank you so much, Sandeep ji. Your presence itself matters a lot here. And now I request Advocate Anurag Sharma ji to kindly introduce the speaker. Although Abhay Desai ji needs no introduction, he is a well-known name in the entire country. But still, as a mark of formality, I request Advocate Anurag Sharma ji to kindly brief the profile of the speaker to the entire house.
अनुराग आप हैं? अनुराग आप यहाँ पर हैं?
Anurag was very much here. Maybe he's not able to unmute himself.
हाँ नहीं, उनको
Anurag, I'll ask him to unmute. He's there.
Okay, sir. Please kindly.
I requested him to. Yeah, he's there, sir.
Sir, I am audible now.
Yes. You're
right,
very much
right.
audible.
Yes, Anurag ji. So kindly.
Good evening, everyone. Advocate CA Abhay Desai. Mr. Abhay Desai has the meritorious academic background, including all India ranks in CA examination. He is also a qualified lawyer. He started to practice right after qualification with the Jagnesh Desai and Company, Chartered Accountants, as a partner. He founded a law firm, Desai Legal, in April 2022, and since then he practices as an advocate. He regularly appears before honorable high courts, tribunals, as well as quasi-judicial authorities. He specializes in the field of taxation and renders advisory as well as litigation services up to the Honorable Supreme Court to the several business entities across India. He is an expert in handling complex issues in indirect taxes. He also has a rich experience representing clients across various authorities, including the tribunal, tribunals. He has he has to his credit several reported judgments in the field of indirect taxation. He has a deep understanding of not just the tax laws but also of the business dynamics as well as technological issues that help in rendering effective advice to clients. He has also authored several books. His book on Sabka Vishwas Dispute Resolution Scheme 2019 has been published by the prestigious Chamber of Tax Consultants Mumbai. He is also one of the contributors of the ICAI publication on GST annual returns and audits. He has also authored several books published by ICAI. He has been co-opted as a member of the Indirect Tax Committee of ICAI for financial year 18-19 and financial year 2021 and 22. He is also a member of Indirect Tax Committee of the Chamber of Tax Consultants Mumbai. He has a representation. He has made representation before the Honorable Finance Minister of India as well as the Honorable Deputy Finance Minister of India on various issues in indirect taxation. He has addressed more than 500 seminars on the indirect taxation to date. He has presented papers as the prestigious RRCs organized by the Bombay Chartered Accountant Society as well as the Chamber of Tax Consultants. He has also presented papers at several national as well as regional conferences across India. He has also addressed several trade bodies such as FICCI as well as the Chamber of Commerce of several states cities. He has published more than 500 articles in the leading journals on taxation in India. His treatise on recovery and attachment proceeding under GVAT law has been published in the International Research Journal of Management and Commerce, published by the Associated Asia Research Foundation. He is a winner of all Gujarat Elution competition held by the Bar Association. He has also been awarded as the best column paper writer by the Gujarat Sales Tax Bar Association as well as the Goods and Service Tax Practitioners Association of Maharashtra. This all the
Thank you very much, Anuragji. Now, without standing in
thank you.
between the so learned speaker and the audience, I would straight away request Abhayji to start his deliberation, and we all are very keen to listen to him. Thank you very much.
Yeah. Meanwhile, Rajender sir, we also acknowledge the presence of Vice Chairman AIFTP NZ, Ranjit Sharma ji. And I can see some prominent names like Mukul Gupta ji has also joined and Ashwin Acharya ji. So we welcome you all to the program, sir.
Oh,
Over
that's
to you,
very,
Abhay sir. The stage is
Mm,
all yours.
that's great. That's great.
Yeah, good evening, everyone. First and foremost, I am indeed grateful to the AIFTP North Zone, the respected Chairman Sandeep ji, Rajender Arora ji, Aanchal Kapoor ji, all the seniors who are present today on this webinar and friends. It is indeed a pleasure for multiple reasons. Number one, AIFTP has always been close to my heart. Number two, this is an interesting topic where apart from the factual disputes which we witness in the notices we are going to discuss, there are very important legal issues that are arising in these situations, and it would be very important for all of us to understand and take appropriate contentions while drafting the replies to such notices. so that the issues that you want to contest on are preserved at the stage of adjudication. There is a very important reason for this, and that is coming out from section 160. I don't know how many of you have gone through that provision. It's a very interesting provision that we find in the GST law. Let me start the discussion with that, and then let me take you through the presentation that I have. Now, if you see section 160 of the CGST Act, it's very interestingly worded provision. Courts are also yet to apply their mind on how they will look at this provision. Now, this particular section is divided into two subsections. Subsection 1 essentially says that in a situation where an adjudication or an assessment happens, and in substance, if that adjudication or that assessment complies with the requirements of the law, then no defect can be really raised in those proceedings. Subsection 2, also interestingly worded, says that if the notice is not called in question or an order is not called in question at the first available opportunity, and if the taxpayer has acted on that notice or an order, then the taxpayer loses that ground to contest the validity of that particular notice or order at a subsequent stage in the proceedings. We will see how it applies in the context of the notices that we are going to discuss. And to my mind, there are certain very serious defects which are evident in the notices that have been recently issued by the state GST department. And to my mind, section 160 would not be adequate enough to save those defects, in a sense to say that despite those defects, the proceedings can be held to be valid. I will give my thoughts on why I am saying that, and perhaps this is the contention that I would suggest all of us must consider while drafting the reply to the notices. So let me just first share the screen. Right. So basically what we intend to discuss today is the approach that one should have while drafting the reply to the show cause notices. My experience suggests that once we have a proper framework ready in our mind as regards to the contentions that we want to take, both on the legal front and on the factual front, then the task of drafting the reply to that extent becomes quite easier. So our focus in today's discussion would be the key important contentions that one can consider taking while responding to such notices. Now, why this entire issue has arisen, why across India we are seeing the State Department taking this route of issuing such mechanical notices. Now, as history suggests that the State Department in the pre-GST era was much concerned only with the taxation of goods. Essentially, they were administering the VAT law and the CST laws. The State Department never had a good opportunity to really look at the taxation related to services, look at certain complex transactions where there is an interplay of goods as well as services. Also in the pre-GST era, the larger disputes concerning the levy under the VAT law and CST law were more governed on based on the laws which are drafted and the schedules which are drafted under that respective laws, and not much linked to the way the classification used to happen under the excise law or under the customs law. Now, when we are comparing this situation with the GST regime, we are seeing that most of the important provisions which we find in the GST law has been borrowed from the earlier excise law. Therefore, it appears that the State Department initially found it very difficult to really appreciate the law, try and apply the law to the facts of the taxpayers who have been allotted to the concerned State Department, and therefore not much action has happened on that front as far as the routine audits are concerned, or as far as the routine scrutiny and the issuance of notices are concerned. As opposed to that, we find that the central department has been quite active. They are conducting audits, they are drawing paras, and based on that, they are issuing notices. Now, looking at this situation, perhaps it appears that persons sitting in the State Department might have thought that ultimately we will also have to come out with notices which indicates short payment of taxes or wrong availment of credits. So it is in that line that it appears that someone suggested that there is a software which has been developed by a firm which is based in one of the prominent city in South. So many state departments approached this particular firm, bought the software which they had developed, and basis that software, the software was run across the data of the taxpayers which are allotted to the state. And basis that, the software has generated certain discrepancies. These are all discrepancies which have been identified by the software based on the returns which have been filed by the taxpayers or the suppliers of the state taxpayers. So basis which a standard format of the notices has been prepared, and basis which the notices have been issued en masse to almost all the assessees which are with the state. This has not just happened in few states. As I understand, this has happened in almost all the states. Now, what we are discussing today is notices for financial year 18-19. Now, many of you would be wondering that what about 17-18? Now, in 17-18, we had a similar set of notices which were issued. Orders have already been passed. In cases where adverse orders have been passed, certainly appeals would have to be filed, or in appropriate cases, a petition might be required. So although our today's topic deals specifically with the approach to the drafting of the reply to the notices, what I also intend to take, and as you can see on the screen or the agenda also, I also intend to take maybe in last half an hour certain very important aspects related to the filing of the appeals or exercise of the remedy available under Article 226, as to help you to understand the situations where you can consider the factors to take a decision on whether you should file ideally an appeal against the order for 17-18, or you can consider approaching a writ court under 226 with an appropriate remedy. I will discuss my experience of how we advise the clients when they come to us with the orders for 17-18 as to the kind of approach that one can consider having. There are also very important issues which are arising if one takes the recourse of appeal in terms of the pre-deposit that one is supposed to pay. How that pre-deposit can be paid, whether the pre-deposit has to be mandatorily paid through cash ledger, or is there a or whether the law permits the concerned appellant to pay the pre-deposit using the balance which is available in the credit ledger. There are also certain important issues arising at the time of filing the appeal as regards jurisdiction, as regards the manner in which the proceedings have been initiated at the stage of adjudication, and what kind of grounds or defense one can consider taking in this situation. So for next maybe 1 hour, 15 minutes, we will discuss the approach that one should have while drafting the reply to the notices that many of us today as professionals would have got from our clients for 18-19. And at the same time, in last half an hour, we will also consider certain issues arising in the course of filing of the appeals in related to the similar notices which have been issued for 17-18, for which orders have already been passed. Now coming to adjudication, let me just take you first through what we intend to discuss. So I will just quickly take you through the specimen notice for all of us to be on the same page to understand the subject matter. In Gujarat, from where I am coming, there have been instructions issued, and I am sure other states also have followed, and their commissionerates have also issued certain similar instructions, whereby certain set of situations have been excluded, in a sense to say that in those situations, the officers have been instructed to drop those notices. So we will just briefly look at what kind of instructions that we have in Gujarat, and perhaps you can consider similar instructions in the state where the particular taxpayer is based. This also will become very vital to the way in which you approach the notice. Then we look at the most interesting part of this discussion, which deals with the validity of the notice. So we deal with first the kind of allegations which are put across to the taxpayer, the sustainability of those allegations. We look at the aspect of limitation, more particularly the exercise of power under section 168 capital A, You are aware the Parliament inserted this particular provision to do away with situations where due to COVID-19, certain tasks could not be completed. So in the guise of those provisions, notifications have been issued where the time limit for issuing the orders for particular year that we are discussing, 18-19, have been extended under section 73, subsection 9 of the CGST Act. So we deal with legal issues which are arising as regards to the limitation. Can it be said that whether the notification lacks the jurisdiction when we see the provisions of 168 capital A? Then we look at another aspect dealing with notices to say that can such notices be directly issued or whether any other proceeding are required to have been initiated prior to the issuance of such notices. We looked at concurrent proceedings. There are many taxpayers who are suffering proceedings on certain issues by other department or by the same state department, some other wing. And again, those matters are again forming part of such notices which have been mechanically issued. So we look at that aspect. Then we look at the manner in which the notices have been issued. We look at the manner in which they are supposed to be authenticated and how in many cases we have found the way it has been authenticated. We also look at the personal hearing aspect. Is it compulsory? Is it not compulsory? We look at the time time limit that one can expect, which deserves to be granted to the taxpayer to respond to such notices. We look at the point-wise response that one can consider filing in such situations, and we look at what can be the way forward. So this is a specimen notice. This is a form DRC01. It is essentially a summary of the show cause notice. It is not. It is not the show cause notice. Therefore, it only indicates the quantification of the liability that the department seeks to recover from the taxpayer. As you can see, this is for 18-19. It only indicates the amount of tax, interest, and penalty or any fee which the department seeks to recover. There is an attachment with this notice which indicates the detailed annexure as to the various points on which these amounts have been quantified. As you can see, there is also a table at the end of this form which indicates the due date by which a taxpayer is supposed to file the reply. There is also in the same table at serial number 2, there is a space for indicating the date on which personal hearing is to be granted, the time of hearing, and the venue, that is the place where the hearing is supposed to be held. The notice ends with the designation and the jurisdiction of the officer who is purported to be issuing such notices, and it indicates the space for putting the signature, either the physical signature or the digital signature as the case may be. Then there is an attachment to this notice, which again in the top indicates the basic details of the officer, the jurisdiction from where the notice has been issued, the details of the taxpayer. It again quantifies the liability which is proposed to be recovered, and then it gives detailed findings as to how the proposed liability has been determined. Largely, we can divide the set of issues that are indicated in such notices into two broad categories, one on the outward side, another on the ITC side. On the outward side, you can see the first issue deals with the reconciliation of the liability which has been admitted in the form GSTR01, which is the statement of outward supplies which is filed by the taxpayers under section 37 of the CGST Act. That admitted liability is compared with the liability actually indicated in the annual return. And if there is any adverse difference, it is indicated, and it is that difference which is proposed to be recovered. In 18-19, we also find this unique comparison that you can see on the bottom part of the screen, where they intend to compare the liability declared in the e-way bills which have been issued by the taxpayers, and that is sought to be compared with the liability declared in the annual return. And if there is any adverse difference, it is brought out here, and it is ultimately taken as part of the amount of liability which is proposed to be recovered. On the ITC front, we have several sub-issues which the notice is trying to indicate. The notice refers to section 16(2)(c) so as to say that it is under the guise of this provision that the department intends to make the recoveries. If you see several tables related to ITC, there are several reconciliations which are made, basis which the differences have been identified. The first table deals with a situation where they compare the ITC, which is auto-populated in table 8A of annual return, which is the ITC coming from form GSTR 2A. There are adjustments made to the extent of ISD imports, RCM, some brought forward credit of the preceding year, or something availed in current year but taken in the next year. So after all those timing differences which are adjusted, it arrives at the net ITC, and that is compared with the ITC which is actually availed in 3B, and basis which if there is any adverse figure, it is sought to be recovered. Then we have another table which compares the reversals which are indicated in 3B with the reversals indicated in the annual return, and if there are any adverse differences here, again these are again tabulated, and this is again what is sought to be recovered as part of this proceeding. Then the notice refers to section 17.1 and 17.2. The notice identifies that there are certain exempt supplies which you have indicated in the annual return that you have filed, basis which a ratio is derived of exempt supplies to total supplies. The notice identifies the credit, all the credits which have been availed by the taxpayer during this particular tax period as common credits. It applies the ratio what has been derived of the exempt supply to total supplies, and basis which the notice identifies the amount of ITC which was required to be reversed. It compares the same with the ITC which has already been reversed, and if there is any adverse difference, then that is again sought to be recovered. In this table, the notice identifies certain inward supplies which the notice presumes are not eligible for credit. So basis which a summary is drawn where the kind of commodity or a service in question is identified, it is described. The HSN and the SSC code of this inward supplies are identified, basis which amounts are quantified. The total aggregate of the ineligible credit is compared with what has already been reversed, and if there is any difference which is yet to be reversed, the notice ultimately seeks to recover this amount. The notice also then goes and identifies certain suppliers whose registrations have been cancelled with a retrospective effect, which is a date prior to the date on which the purchases were made. So those suppliers are identified, and the credit which has flown from those suppliers is quantified and tabulated in this table. The notice also identifies certain suppliers who have not filed 3B. Those ITC flowing from those suppliers is quantified. The notice also identifies suppliers who have filed 3B but showing nil turnover, whereas they have declared certain turnover in their GSTR1, that is their statement on outward supplies, and basis which again this tax is indicated here, and the aggregate of this is again sought to be recovered. Then there is a summary of all the tables that we saw earlier. Wherever there are adverse differences, all of those differences are summarized here, and that is indicated as the tax which is due. Notice applies interest till the date of issuance of the notice. Notice also imposes a penalty of 10% of the amount of tax which has been indicated, and basis which the total amount of liability is quantified. The notice at the end basically states that this is the amount that they intend to recover under section 73 of the State Act or the Central Act. The notice also talks about applying interest at 18% till the date of payment, and the notice also talks about applying a penalty at the rate of 10% of the tax which is due. And the notice then says that if a taxpayer is not agreeing with the proposals in the notice, then the taxpayer is given an option to, or taxpayer is permitted rather to file objections in DRC 06 within 30 days from the date of the receipt of this notice. And that is how the notice indicates that the final assessment orders would be passed. So this is in a way a notice that we have what we intend to discuss and the ramifications of this particular proceeding. Now, before we deal with the ramifications, please appreciate couple of aspects. One is these are the notices which are issued by exercising the power under 73. Now, as many of you would be aware, under the scheme of law, what we have is that if the government intends to make any recovery of taxes, which includes an ITC which has been alleged to be wrongly availed, The provisions are contained under 73 and 74 of the State GST or the Central GST Act. Now, 73 applies in situations other than fraud, and 74 applies in a situation where there is also an allegation of fraud. These are the notices which have been issued under 73, and therefore the issuer in a way admits that these are all the issues in which there was no deliberate attempt to evade or there was no deliberate attempt to suppress the facts or to evade the taxes. Now, another important aspect that you must keep in mind is that these are the notices, as you can see, as you saw all the tables, these are all based on the filings which have already been done by the taxpayers, either by the taxpayer himself in terms of GSTR 1 or 3B or annual return, or by the suppliers of the taxpayers. It is only that data which is principally considered for arriving at this so-called differences which are now sought to be recovered in exercise of powers available under 73. Now, apart from merits of each case, which I'm sure every one of the participants would be dealing with independently based on the issues that one comes across in the differences that we have just noted. However, there are certain very important legal issues that one must understand. Before we deal with legal issues, this is a instruction that has been issued by the Gujarat State Authorities. Other states have also issued similar instructions, whereby certain set of cases have been excluded from this kind of proceedings. In a sense, the state commissioner has indicated that in such situation, the system-based notices that we saw would be dropped, and it is other proceedings which are, if initiated or has already been initiated, those are the proceedings which would continue. So, which are those exceptions? Largely, this deals with cases where already audits have happened. Audit findings have also been issued. In these cases, the instructions are indicating that in that situation for 18-19, if audit has happened, departmental audit under section 65, and audit findings have been given, then in that situation, the notices would get dropped. It also considers situation where the provisions under 74 has been invoked or the department intends to invoke. This is dealing with cases where department alleges that the credits have been availed on fake invoices. In this situation, the instructions indicates that since the department intends to invoke 74, that is the larger period of limitation where fraud is alleged. So in those situations, it is those proceedings that would survive, and the current proceedings under 73 would have to be concluded. It also indicates that in a situation where, let us say, what we saw earlier, the block credit, the 17.5 list, it also indicates that where the officers find that the taxpayers are actually dealers in those products like cement, steel, motor vehicle. In those cases, the instructions indicates that in those situations, the officer should not call for any further data or any further hearing. The officer should understand that these are the dealers of those goods, and therefore the credit of those items is eligible. It is not blocked, and therefore in those situations also the notices should be dropped. It also considers situation where there are exempt supplies, and the notice indicates that if the officer finds that in the return, if a reversal has been indicated qua the exempt supplies, then in those situations, the instructions indicate that no further proceedings are necessary. The instructions, in a sense, also indicate that as far as possible, the departmental visits should not be insisted upon, and basis the submissions which are filed by the taxpayers and the data which is available through the portal, the officers are supposed to take a judicial call and accordingly pass orders. So this is the instruction that we have. This is from Gujarat. We will have similar instructions also from other states. In a way, what I find that these instructions have been issued to dilute the kind of impact that this notice is created in the trade. However, as all of you would agree that there are many other situations, and as our presentation later will also indicate, where again such kind of notices were completely unwarranted. Therefore, perhaps those situations also ought to have been included here. Unfortunately, they have not been included, and therefore in those situations the taxpayers are now compelled to address the notices that have been served upon them. However, why I am discussing this is that before replying the notice, kindly have a look at the instructions that have been issued by the concerned state for which you are preparing the reply. To find that your matter is covered by those exceptions which are indicated in those instructions, then indicating those exceptions itself should solve your issue. By indicating those exceptions and indicating that you are falling in those exceptions, the notices would get dropped, and therefore that would be the first consideration that one should have in mind while dealing with this subject. Now, let us say you find that the notice which your client has received does not fall into any of those exceptions that the state commissioner has indicated. Then you are compelled to address the notice. You are compelled to consider and accordingly file the response. Now, what kind of objections that you must take while drafting the response? Now, very first important point that you must have is that these notices are bad in law for the simple reason that Section 73 subsection 1 doesn't permit the officers to issue such kind of notices. Now, why I am saying that? Let us look very closely at what Section 73 subsection 1 says. What it says that where it appears to the proper officer that any tax has not been paid or short paid or erroneously refunded, or where input tax credit has been wrongly availed or utilized for any reason other than fraud, then such officer shall serve notice on the person chargeable with such tax which has not been paid or ITC which has been wrongly availed or utilized, requiring him to show cause as to why he should not pay that amount which is indicated in the notice. So what is the jurisdictional fact that can enable the officer to exercise such provision? Now, the power given by 73(1) is contingent on the fact that it should appear to the proper officer that the tax has not been paid. Now, how do you look at this in this context? When you look at the scheme of the Act, as you are aware and what we discussed, the entire allegations which are indicated in the notice are coming out from scrutiny of the returns. These are all the issues which are arising from mere scrutiny of the returns. Now, you are aware under Section 61, we have a provision which indicates that the manner in which the officers are supposed to scrutinize the return, and it is based on that scrutiny. If they find that still they are not satisfied with the response that they have got, or in absence of response, it is at that point in time that Section 61 permits the officers to travel to Section 73 to say that in such situations, at that stage, you can then make an allegation to say that in absence of response or in absence of a satisfactory response, the officer is now in a position to say that it is appearing to him that the tax has not been paid or credit has been wrongly availed. So, although the fact that 61 and 73 doesn't have a non-obstant clause, the scheme of the Act, what it appears is very evident to say that in a situation where the issues are arising from scrutiny of returns, traveling to Section 61 is mandatory, and it is post applying Section 61 by issuing a notice in form ASMT 10, getting a response, and then coming with a conclusion to say that then the officer is of the opinion that tax has not been paid or ITC has been wrongly availed. It is at that point in time that one can say that the jurisdictional fact comes into existence, which can then enable the officers to exercise the power which is available under 73(1) to issue the notice. One cannot say that merely based on the discrepancy of what has been indicated in the notice, it can appear that the tax has not been paid or credit has not been availed. To illustrate this point, when we looked at the tables that we saw earlier, none of the table really indicates with any kind of certainty that either the tax has not been paid or credit has been wrongly availed. If you look at the tax payment part on the outward side, what the table compares? The table compares the liability declared in 1 with the liability declared in 3. The table does not consider the payments which might have been made by the taxpayer through DRC 03, which is again a valid means of making the payment of discharge towards liability. The table fails to consider the liability which might have been discharged in the subsequent period by the taxpayer. So, a mere comparison of GSTR 1 with 3B cannot tantamount to say that the proper officer is in a position to allege that the difference has not been paid. The officer is supposed to undertake a verification of scrutiny of return under Section 61. And then, considering the response, then perhaps he can reach a stage to say that even after considering the response, whatever taxpayer has filed, on the basis of the scrutiny, the tax still appears to have not been paid, and it is at that point in time that this power would be available to the officers. Similarly, when you looked at the ITC front, input tax credit, you look at the table 8A difference. Now that 8A difference is already part of annual return. The difference which has been indicated in the notice is actually directly coming from annual return. Nothing new has been added in this particular table as far as this notice are concerned. So then from where the officer now gets into a position where he is now saying that it appears to him that the credit has been wrongly availed. Is there any incremental fact or any additional evidence which is now available at the hands of the officer to make that allegation? The answer is no. Similarly, look at the table when they want to apply 17.5. Now, how they are applying section 17.5? They say that, look, there is your supplier A. Now, supplier A in the registration certificate has declared that he is dealing in motor vehicles. It is not necessary that the supplier A only deals with motor vehicles. It is quite possible supplier A deals with a lot of other aspects or other businesses also. It is also not necessary that supplier A only deals with motor vehicles having capacity of up to 13%. Now, the law provides for the restriction of ITC only in respect of motor vehicle in certain situations, based on the capacity of the vehicle, subject to the exclusions which are available in the law. Merely because the supplier has indicated in his registration certificate that he is dealing with motor vehicle, it cannot mean that all the supplies that he has made are all of motor vehicles where the ITC is blocked under section 17.5. It is a very wrong presumption which has been made. No verification at all is undertaken, and basis that entire assumption, a proper officer is now in a position to say that it is based on this assumption that he is invoking 73.1. 73 subsection 1 doesn't say that where it assumes to the proper officer. It says where it appears to the proper officer. The courts are reading the word appear to mean that there should be some cogent material which must be available at the hands of the officer to reach to that jurisdictional fact that really some tax has either not been paid or ITC has been wrongly availed. An assumption or a mere presumption cannot tantamount to a ground for the officer to exercise the jurisdiction under 73.1. So please keep this aspect in mind and please consider this as one of the contention that you must take while responding to such notices. Another aspect, 75 subsection 6 and 7 are very important. What it says that when the proper officer is supposed to pass an order, he will have to set out all the relevant facts and the basis of the decision. And subsection 7 says that the demand cannot be confirmed on the grounds other than the grounds specified in the notice. Now, have a look at the notice. Whether notice is really indicating any grounds? The answer is clear no. The notice is only tabulating the discrepancies which has been observed in the returns which have been filed by the taxpayer. There are no cogent grounds. Let aside even provisions of the law which are indicated in these notices, basis which the so-called discrepancies are sought to be recovered. The law is very clear. Notice should have the ground, and it is on those grounds that the order will have to be passed, either dropping the demand or confirming the demand. In a situation where the notice lacks the ground itself, then in that situation, how the officer would be in a position to pass an order in absence of any grounds which are there in the notice. So again, this is a very serious defect of the notice. And it is for this reason I am saying that the word appear in 73 subsection 1 requires the officer to first apply the mind, scrutinize the return under section 61 and then come to 73.1 and then exercise the power, because at that stage, he will have adequate grounds to support his contention that the tax has not been paid or ITC has been wrongly availed. So reading the law, by taking all these provisions in mind, certainly one can say that the power which is exercised by the officers is not in accordance with law. Now we have series of judgments right from Brindavan Beverages, Out Sugar Mills, HMM, where the Supreme Court is consistently saying that vague notices cannot be sustained. If the allegations are vague, like what we saw in this particular situation, where merely tabulated comparisons are there, such kind of vague notices without indicating cogent grounds cannot be adequate enough for the proceedings to sustain. So you can take recourse to all these judgments that are there. I will also share the presentation. So as part of your contention. Now, another important aspect of limitation. Now, this is also very important. Now, what 73.2 says? 73.2 subsection 2 of 73 says that notice shall be issued at least 3 months prior to the limit specified in subsection 10 for the issuance of order. Subsection 10 says that proper officer shall issue the order within 3 years from the due date of the furnishing of the annual return. Now, for 18-19, this time limit is already over. The regular time limit as per the law, that is as per section 73, is already over. Now, how is government getting away from this? Government is getting away from this is by taking recourse to section 168 capital A. This is a provision which was inserted through TOLA. This was the provision which was inserted in the context of COVID. It is by virtue of exercise of this provision that the government has been issuing notifications. Total 5 notifications have been issued. The latest is 56 by 2023, whereby the limitation for issuing the order under subsection 10 of 73 has been extended. For 17-18, it was extended to 31st December 23. For 18-19, now we find that the extension is there up to 30th April 24. Now, basis this, can we say that the notices which have been issued in the last week of December, or notices which might come now in this month, because government is reading this provision in a way to say that, look, we have a power till 30th April 24 to issue an order for 18-19. Now, since we have a time limit of issuing the order till 30th April, by applying subsection 2 to section 73, we can issue a notice at least 3 months prior to the cutoff date for issuing the order. Since the cutoff date for issuing the order is 30th April 24, 3 months prior to that would be 31st January 24. Therefore, the department is right now of the view that notices which are issued on or before 31st January 24 for 18-19 would be in accordance with section 73, and therefore on that basis the proceedings are valid in law. This is the entire view that the right now the department has in a way to justify the notices which have been issued presently. Now let us look at the validity of this aspect. Now the power is drawn from section 168 capital A. Now look at 168 capital A. What it says? It says, notwithstanding anything contained in this act, the government may, on the recommendations of the council, by notification, extend the time limit specified in or prescribed or notified under this act in respect of any actions which cannot be completed or complied with due to force majeure. And the power under subsection 1 also includes the power to give a retrospective effect, and the force majeure has been defined in a very broad sense to mean a war, epidemic, flood, drought, fire, cyclone, earthquake, or any other calamity caused by nature or otherwise affecting the implementation of any of the provisions of this act. So this is the provision by virtue of which the notification have been issued for extending the time limit for issuance of order. Now, what are the issues here? Principally, I find there are 3 very important issues that one has to understand and apply. Number 1, if you see section 168 capital A in isolation, it gives an unbridled power to the government. Why I am saying that? Because look at the definition of force majeure. It doesn't limit only to the acts of God. It extends to the acts which are otherwise. It doesn't say that the force majeure would only be limited to the acts which are either in the nature of war, epidemic, flood, which are extreme events that mankind faces. It also includes any other calamity. Now, any other calamity is a very broad word, which may include anything and everything which the government tomorrow may decide. And that calamity could have been caused not just by nature, but even otherwise. So even a man-made calamity is sufficient ground for the government to exercise this power and extend the limits which are otherwise prescribed or notified in the law. It's an unbridled power. And if this unbridled power is not checked, certainly the unbridled power can be abused. If these kind of provisions are sustained, then certainly this kind of provisions can lead to situations where the government can exercise this provision, because these are not the provisions which are only for time gap, that only for the COVID period these were in place and these are to be removed post-COVID. This now becomes a permanent part of the act. If this be the case, Now, we have already a jurisprudence which has developed under Article 14 to say that even manifestly arbitrary provision can also be struck down by the courts if it gives an unbridled power to the government to override the reasonable provisions which are there in the law. Now, why I am saying this? See, the entire issue of limitation under 73 and 74 is to put an end to a particular year. Now, 3 years is under 73 and 5 years is under 74. It is a reasonable limitation for the government to demand any dues, and if those time limits are crossed, then that puts an end to that year. And therefore, no further liability qua though that year can be again raised before the taxpayer. Now, a situation happens like what we are seeing now, where the ordinary time limits are already over. And now the government is turning back the clock and going and extending their time limits for issuing the notices or order, then definitely it leads to a situation which is completely arbitrary and unreasonable. And therefore, some checks will have to be put in place while reading 168 capital A. A very broad reading of this provision cannot lead to a situation where the power is abused. Now, what kind of checks that one can consider having in this situation? Parliament itself has specified if a minute reading of this provision is undertaken, the Parliament itself has put a check on this power. Now, how Parliament has put a check on this power? If you see subsection 1 and read carefully, this power is available only in respect of actions which cannot be completed or complied with due to force majeure. So, it envisages a situation where an action has already started, but because of a force majeure event, that action could not be completed or complied with. And therefore, for the limited purpose of completing that action, the power is given by the Parliament to the executive, to the government to extend the time limits which are available under the law. And that is the reason why I am saying, if you see notification, last notification 56, or even earlier notification, they are only extending the time limit for issuance of order. They are silent on the limitations of issuance of notices. Now, why this is a very important point? It is very important point for the reason that issuance of show cause notice is not an action which is completed. It is in fact an initiation of an action. Passing of order is an action which is to be completed qua the notices which have already been initiated. So my understanding of section 168 capital A is like this, that it doesn't permit the government to initiate a fresh action beyond the time limit which has already been expired in law. It only grants the power to the government to complete the action which has already been initiated, but order could not be passed within the ordinary time limits which are prescribed in the Act. If the intention of the Parliament had been to also allow initiation of fresh action after the limitation is already over for initiating those actions, as a case in our example, already the limitation for issuing show cause notices for 18-19 is already over. Now your fresh action is initiated by issuing show cause notices for 18-19. If that would have been the intention of the Parliament of permitting the government to do such act, then the language of 168A subsection 1 should have been in respect of actions which cannot be initiated, completed or complied with. The word initiated is missing in subsection 1. Subsection 1 only permits the government to extend the time limit to complete the actions and not initiate fresh actions in guise of this provision. So this is something which will have to be tested in the courts so as to say that whether 168 capital A can permit the government to initiate a fresh action, where the express reading of this provision seems to indicate that it only permits the completion of the action, doesn't permit initiation of a fresh action. So this is first aspect that one must consider in mind. The second aspect where high courts have entertained this action is on the basis that, look, already now when the notification is issued, the COVID period is long over. Now, whether at this point in time, can a recourse be made to section 168 capital A to say that is by virtue of this provision that this notification which we are issuing today after the COVID period can sustain. The view which is canvassed is like this, that 168 capital A applies subject to the existent jurisdictional fact that there is a force majeure which is in existence, and because of this force majeure event, action could not be completed, and it is at that point in time that the power is exercised to extend the limitation for completing those actions. In a situation where the force majeure event has already ended, and now we are in a situation where there is no disruption to allow the completion of the action or the initiation of the action which is sought for under section 73. So now at the present point in time, can the power be exercised? That is the second aspect which is there, which is already there in a couple of high courts already, where interim reliefs in terms of staying the proceedings vis-a-vis such notices have been there. So these are two important aspects. Third very important aspect. Look, 168 capital A says what? That it is because of force majeure that the government could not complete the actions which were otherwise required, and it is therefore to permit the government to complete those actions that an extension can be undertaken. If you look at our situation, these are all mechanical system-based notices. These are not the notices where the officers have done any scrutiny. They have not exercised powers under section 61 for them to complain that because of COVID for 2 years, we could not scrutinize, we could not do written scrutiny, and therefore now we want to do written scrutiny, and then we want to issue the notices. Then perhaps there can be a justification to say that the officer really needs time, and therefore there is a good reason for them to extend the limitation. In a situation that we are having where mechanical system-based notices are issued based on mere comparison of data which is there in the portal right from 1718 and 1890, can we say that there was really any hurdle for the officers to take the action which they have taken today within the otherwise available normal limitations under 73? The answer would be clear no. There were no hurdles before the officer to run the same software within the limitations, within the ordinary limitation under 73, and issue such notices within the normal periods of limitation. So for these kind of actions which are merely based on written scrutiny, if such kind of actions are justified on the basis that because of COVID, the officers could not take such action when the officer itself are not actually playing any role. It is the system which is deriving these differences and compiling this summary of the notice. In those situations, again, to my mind, 168 capital A has to be tested. Whether 168 capital A is broad enough to permit the government to override their laxity at their end in undertaking the scrutiny, which otherwise they should have ideally done before issuing such en masse notices. So again, something that 168 capital A will have to be tested upon. So these are three important aspects on which one should really consider and draft the response. We already have rulings. We have a Madras High Court ruling in the case of Vadivel. The Madras High Court has taken a view that written scrutiny is must in such situations where basis written scrutiny, the proceedings are sought to be initiated. We also have currently an interim order, a very good order from a Guwahati High Court in case of PepsiCo Holdings, where the Guwahati High Court has taken a view that in such situations, jurisdictional fact can only come into existence if post-written scrutiny, the officers arrive at a conclusion that tax has really not been paid or ITC has been wrongly availed. Without that scrutiny, merely based on such mechanical comparison of figures, jurisdictional fact cannot be said to come into existence so as to enable the officers to exercise the jurisdiction under 73 subsection 1. So these are the rulings that we will also see as time progresses, a development on this aspect. But certainly, as a taxpayer, as a consultant, as a professional, we should take this as a strong defense while responding to such notices. We also have situations where there are concurrent proceedings. Now, law gives us shelter under section 6(2)(b) to say that on that same subject matter, if already the proceedings have been initiated by the other department, by the officer of the other department, then on that same subject matter, the state department cannot initiate the proceeding. So if you are coming across a situation where, let us say, the notice is considering transactions like, let us say, cancelled dealer, what we saw earlier, the suppliers whose registrations have been cancelled with a retrospective effect. Now, if that very subject matter is already seized by the central department in some earlier proceeding, qua 1890, then in that situation, that subject matter can again not be exercised. The jurisdiction over that subject matter again cannot be exercised in by the state authorities in such situations. So again, you can take recourse to section 6(2)(b) so as to say that qua the subject matter, if the jurisdiction has already been exercised by the central department, then the state is not permitted to exercise that jurisdiction. Now, another important issue that one has to deal with is the issuance of notice. Now, law says that the notice has to be issued at least 3 months prior to the limitation. Now, how the law envisages the issuance of the notice? The law says under section 161 subsection 1, various methods through which the decisions or the notices can be communicated. One of the method is by making it available on the common portal. Now, apart from this, there are other methods also in terms of sending the notices through postal department, so on and so forth. And then the law makes a deeming fiction to say that if the notices are sent through postal department, then it is the date on which the notice is tendered to the postal department as would be the date on which it would have been deemed to be served to the concerned taxpayer. Now, many practical issues are arising because it is quite possible that some GSTN could have been suspended or some GSTN could have been cancelled, and now notices have been issued, but the taxpayer is unable to access those notices, unable to get a hand on those notices, and manually notices are received today or maybe after 31st January. Now, in a situation where let us say you receive a notice after 31st January manually, and the case of the department is that it was uploaded on the portal, but the case of the taxpayer is that on the portal either he is facing some technical issue or is unable to access the portal. Now we are having judicial views to the effect that in such situation it cannot be said that by merely uploading the notice on the portal that the notice has been issued or it has been served to the taxpayer. A proper service of the notice requires that the taxpayer must be aware of such issuance of the notices. In fact, recently what I understand that GSTN portal has also been revamped to have a separate tab for notices and orders so as to bring that to the attention of the taxpayer. So if you are facing those issues, kindly note the date on which you actually receive the notice. If those dates are beyond the limitation of what we just discussed, then certainly a strong defense can be taken to say that notices are barred by limitation, and therefore it is covered by the principle of fruits of poisonous tree, where the legal principle says that if the tree is poisonous, the fruits which the tree will bear would also be poisonous. So if the notice is poisonous, the fruits that it will bear in terms of the order would also suffer from that same invalidity. And therefore, to that extent, the proceedings would be bad in law. So kindly also pay attention to the actual date on which the notice is served, and vis-a-vis that the limitation will have to be considered. Another important aspect is authentication. Now, many notices we have seen are not signed at all. They are not signed by the officers, neither digitally signed nor physically signed. What is the validity of those notices? If you see Rule 26 sub Rule 3, it categorically mandates that all the notices should bear the signature of the officer, because in absence of signature, it cannot be authenticated. Merely issuing notice on the portal is not good enough for the department to say that the notice has been served. Wherever unsigned notices have been served, courts are saying, as you can see, I have referred some decisions of the Delhi High Court. There is another decision of Madras High Court, where the courts are saying that unsigned notices are bad in law and therefore should not, and therefore the taxpayer is not expected to act upon those notices. Again, an important point that you must consider. Now, as far as personal hearing is concerned, as you can see, most of the notices do not contain the date on which a taxpayer is supposed to come for the hearing. Department presumes that hearing can be given only when taxpayer asks for it. To my understanding, the department is not correct in that proposition. Why I am saying that, if you look at section 75 subsection 4, it categorically says that an opportunity of hearing shall be granted where a request is received in writing from the person chargeable with tax or penalty. That is one part. Second part, very important, or where any adverse decision is contemplated against such person. So law specifically mandates that wherever the officer intends to pass an adverse order, in that situation, it is compulsory to give hearing. Without hearing, if the orders are passed, even if submissions is there on record, those orders would be invalid because those would be contrary to section 75 subsection 4 of the CGST Act. So again, we have case laws on that, as you can see on the screen, where the courts are saying that where an adverse order is passed but no hearing is given, then in those situations the courts are quashing those orders and sending back the matters to the adjudication to do fresh to pass fresh orders after giving adequate opportunity of personal hearing. So again, this is something you must keep in mind. Now, another important aspect what we have to again understand is the time limit for filing the response. Now, the law doesn't really specify the days, minimum days which are supposed to be given to the taxpayer to file the response against the notices. So how the law has developed? Recently, the Madhya Pradesh High Court in the case of Raymond Limited had very interesting observations on this issue. The High Court observes like this, that when you look at the scheme of 73, there is no express time period within which the taxpayer is supposed to respond to the notice. However, the court also looked at the fact that the parliament has specifically indicated, and this is a unique feature of GST law, it was never the case in the earlier regime, that the parliament has specifically indicated two limitations. One limitation for passing the order and another limitation for issuing the notice. And the parliament specifically has indicated the minimum gap that the officer has to observe between the two events, that is the passing of the order and the issuance of notice. In the context of 73, minimum gap should be of 3 months. In the context of 74, the minimum gap is of 6 months. So the Madhya Pradesh High Court reasons from this scheme of the Act to say that when the parliament was conscious enough to say that we want a minimum gap of 3 months between the issuance of order and the passing of the issuance of notice, it indicates that the time limit of 3 months must be given, otherwise to the taxpayers to really prepare themselves and make proper submissions. So again, this is a reasoning which you can apply to say that in a situation where, let us say, the officer indicates only 15 days time to file a response, and you are looking at extended time or additional time to file the response. Certainly, you can rely on these judgments to say that since the law mandates that a reasonable opportunity must be given, and the way 73 is structured, where there is a minimum gap of 3 months which an officer is supposed to maintain between the notice and the order, that itself indicates that an adequate opportunity can only be said to be given when the officer at least allows that particular taxpayer to file the response within this period of 3 months. Giving very short date, giving a very short time period would again vitiate the proceeding, because that would be contrary to the way the 73 has been formulated. We have other decisions also of Delhi High Court, MP High Court. So we also have this interesting decision of Ahmedabad Tribunal, although this was in the context of excise law, but principle is equally applicable, where the issue arose that in a situation where, let us say, in a personal hearing notice, if the officer indicates 3 dates, is it 3 opportunity? The answer is no. It is only single opportunity where the taxpayer can select any of the 3 dates on which he wants a personal hearing. Why this is important? Because law mandates minimum 3 hearings before giving the liberty to the officer to pass the order without hearing. So this is very important. So in a situation where an adverse order is passed, we already looked at 75 subsection 4. Hearing is must. We looked at 75 to say minimum 3 hearings are to be given. And then we looked at the Raymond Limited decision to say that reasonable time must be given to the taxpayers to file a response to such notices. So putting all these 3 together, certainly a situation cannot arise where a notice is issued and in 15 days time or maybe 30 days time, if no response is filed, the officer rushes with the issuance of order. In such situation, if that happens, then as we will discuss a little later, we have a remedy available under Article 226, where we can go before the courts to really say that the natural justice has been denied by such hasty proceedings without appreciating or giving us a reasonable opportunity. Now, let us quickly go through the point-wise response, and then I take you through the issues which are arising in the context of appeals which will arise out of such orders. Now, if you see the outward side, really the notice only indicates arithmetical differences. There may be n reasons of these differences, maybe errors in filing GSTR1, errors in filing GSTR9. At the end of the day, please keep very important principle in mind. And this, you will find a lot of decisions also in this presentation. The principle is like this, that eventually it is the substance of the transaction which will govern the taxability and not the form in which you have filed the returns. So in the returns, it is quite possible that someone might have committed some error. The way in which you can validate that point or give an explanation is through documents. Documents could be in the form of returns, in the form of workings, in the form of statements, in the form of affidavits, or in the form of certificates from professionals like chartered accountants certifying whatever discrepancies or the errors which were there in the return which led to these differences. But at the end of day, the tax has been actually paid by the concerned taxpayer. So the fundamental part that principle that one should keep in mind is that there may be errors that might have been committed by the taxpayers in filing the returns. At the end of the day, the demand cannot be confirmed merely based on that error. Officer cannot confirm the demand merely based on the fact that erroneously, if you have reported higher turnover in GSTR1, we will stick with that figure and we will negate every other explanation that you give and confirm the demand merely on that basis that in GSTR1 you have declared a higher liability. If in the response you are submitting with evidence that there was an error, the actual liability was on the lower side, and there is a justification for that, then in that situation, to my mind, the officer is supposed to consider that explanation and then is supposed to adjudicate the demands. Merely, officer cannot go by GSTR1 or GSTR9 figures blindly and arrive at the liability based on these filings. E-way bill, again, there can be various reasons why there can be discrepancies between the liability as per the e-way bill data and the liability which you declare in your annual return, especially concerning 18-19, because in 18-19, in fact, was the first year when e-way bill was implemented the way we have under the GST law, under Rule 138. So many states have implemented e-way bill in a staggered manner. Not from 1st April, every state has implemented the e-way bill. Even states where e-way bill have been implemented, there are a lot of exceptions which were there in the through notifications which have come. Therefore, all of that will have to be put together, and then one has to ultimately come with an explanation against the point which is indicated, basis the difference between the e-way bill liability and the liability which has been declared in the annual return. Then this is that 8A comparison of ITC. Now 8A comparison, you are all aware. See, for 18-19, the problem is like this. We can divide this entire issue rather into three compartments. That will make it easier for all of us to understand. One is a compartment where there is a timing gap. What is that compartment? Timing gap in a sense to say that, look, 8A figures are freezed. They were taken basis the status of the filing of the supplier as on 31st October 2019. This is for 18-19 we are discussing. It is quite possible that post this 31st October 19, many suppliers would have filed their one or amended their one, and accordingly the status of 2A as on date could be different from the way the figures are indicated in that notice. This is on the first administrative side. In that situation, to my mind, if you go with a revised table of 8A and give the submission and then do the comparison, and then if you are able to justify the difference, then in that situation, the revised figure are required to be considered, and accordingly the matter has to be decided. Another compartment is something where admittedly there is a difference between 8A and what you have claimed in 3B. Can the credit be recovered merely on an admitted difference between 8A and 3B? As you saw earlier, the department is relying on section 16(2) clause C to support their basis that the ITC which is sought to be recovered basis this comparison is by virtue of 16(2)C. Now, if you look at 16(2)C, in fact, there are very important aspects which one has to consider. First is, of course, the larger aspect of whether that provision is valid or invalid. I am not going to waste much time because there is an entire session by itself. Suffice it to say that there are numerous petitions pending across India on the validity of 16(2)C. The basic challenge to that provision is that how can a genuine buyer be expected to confirm that the tax has been paid by the supplier when his duty ends, when he looks at the GSTN, looks at the certificate, finds that the registration is in place, when he makes a supply, gives the payment of tax to him. In that situation, is it not onerous or manifestly arbitrary and unreasonable on the recipient to expect that the supplier has paid the tax and then only be entitled for the credit? So this we have a larger debate under 16.2c. But we also have a interpretational issue under 16.2c, and this is where it is very important, because larger debate may take its own time for the courts to settle. But this interpretational issue is very important. And what is that interpretational issue? Let us say the notice relies on 16.2c. Now let us assume 16.2c is applicable in this situation, when we want to derive, when the liability is sought to be recovered based on difference between 2A and 3B. Now 16.2c, if you see, as was the case in this year, what it says, it doesn't unconditionally say that tax should have been paid. It says subject to section 41, the tax should have been actually paid. Now that phrase subject to section 41 is very important. Now why Parliament created this particular provision by saying that it is subject to section 41? There is a reason for that. What is the reason? Originally, when GST was supposed to be implemented, if you look at the scheme under section 41, whatever credits that you availed were provisional credits. Those credits were then supposed to go through the process of matching. And only through that matching, once it was confirmed that your vendor or your supplier has deposited the tax, only in those situations that credit was getting converted into the final credit, and basis which the final return, that is GSTR 3, was supposed to be filed. That is why that actual payment condition was made subject to section 41, that whatever credit that you are availing now is a provisional credit, and subject to the mechanism under section 41, the aspect of tax payment, of actual payment, would be determined, and basis which the entitlement would get validated. Now, as you are aware, the entire mechanism under section 41, read with 42-43, was not operational during this entire disputed period of 1890. So in this situation, we have we are in a situation where even if one wants to satisfy the condition of actual payment under clause C of section 16.2, the process through which that confirmation can happen was to happen only by virtue of mechanism under 41, read with 42 and 43. So in absence of that mechanism being operational, I would say that clause C cannot be applied at all as far as 1819 is concerned. Please understand, this actual payment condition, the way we have in GST law, was distinct from what we had in the earlier law. In the VAT law also, in many states we had this condition, but this was never subject to any matching or confirmation in the manner in which GST envisaged. GST envisaged to the satisfaction of this payment condition merely based on the matching that was supposed to happen through 2A, 2 and 3. If that process would have been completed, then this condition would have been met. And then in that situation, the person could have been said to be entitled for the credit. So it is from that perspective that the actual payment condition has to be applied. Now, when the mechanism itself was not there, in that situation, to my mind, clause C of subsection 2 of section 16 would not be applicable, and therefore the entire basis of the notice to say that it is by virtue of that clause that this differential liability sought to be recovered cannot sustain. So that is again something that you must take in mind. This is the third bucket. So first bucket, what we saw, administrative issues with 2A or 3B. Second, constitutional issues, the larger issue of 16.2c. And third is the interpretational issue, where 16.2c, even if, let us say, Supreme Court tomorrow says is valid, still this aspect will have to be tested, that in situation where there is a mechanism which was envisaged by the Parliament in terms of 41, and this condition was made subject to section 41, if that mechanism could not operationalize, then in that situation, can that condition at all be then applied to test the entitlement of the credit? So again, this is the third aspect that one has to keep in mind. Of course, there is this circular that we have now, circular 183, which says that if there is this difference is there, and if if the supplier, if you are able to produce a certificate indicating that tax has been paid, and there was an error in filing GSTR1, in that situation, the circular says that the officers are directed to allow the credits. Of course, recourse to that circular also can be done in a situation where you are in a position to obtain such certificates. Now, we are also having decisions where we have a decision from Kerala High Court in the case of Diya agencies, and we have a Calcutta High Court decision in the case of Suncraft, where the courts have taken a view that merely based on 2A, the credit cannot be denied. On Suncraft, I have a additional observation just for reference to say that, look, although SLP has been dismissed by the Apex Court, but that dismissal, to my mind, doesn't lead to the merger of the High Court order with the Supreme Court order, because the dismissal is principally on the monetary ground. So in that situation, you have settled jurisprudence to say that it cannot be said that the High Court order has merged with the Supreme Court order so as to become an order under Article 141, so as to it to become a law of the land. So that aspect must be kept in mind. It is not the case as if this has attained finality, this issue has attained finality. But certainly, what we discussed, Section 16(2)(c), whether, if at all, is applicable in this year is something which has not been tested. Certainly, it will be tested in the coming days, and therefore, that must also be forming part of your contention in this particular case. Now, as far as that exempt supply point is concerned, where the notice wants to compare the total supply, exempt supply, derive the percentage, and then apply that to common credit, and then seek the reversal of that credit. Now, you are all aware, 17 subsection 2 applies only in a situation where you have availed the credit which is attributable to exempt supply. If that answer is yes, then there is an entire mechanism available under Rule 42 and Rule 40T as to the manner in which the restricted credit is to be identified. This straitjacket application of the formula is completely against the law. Entire credit cannot be common credit. So a response to this point has to be by applying Rule 42 and 43, and thereafter deriving the credit, which certainly would be much lower than the amount which you will find indicated in the notices. And it is only to that extent that perhaps reversal may be warranted. Of course, there are other issues like can interest be an exempt supply? The answer would be no. In fact, there is an explanation added to Rule 43, which itself indicates that interest would not be considered as part of exempt supply for the purpose of restricting any credits. Then we have this 17.5 issue. Now, 17.5, when you look at this entire aspect of block credit, please appreciate that Section 17.5 cannot be applied basis the HSN indicated by your suppliers. As I indicated in the illustration that we discussed little earlier, if a supplier has indicated an HSN that is dealing with motor vehicle, doesn't imply that all the supplies emanating from those suppliers are motor vehicles, and therefore the credit of all those supplies is not eligible. The software basis which these notices have been complied is on that assumption that once we identify that the supplier is dealing with cement, once we identify that the supplier is a works contractor, then we will assume that all the supplies made by such supplier are works contract. We assume that all those supplies are in respect of construction of an immovable property other than plant and machinery. And therefore, we assume that the credit of those inward supplies is blocked under Section 17, subsection 5. To my mind, as you already would have guessed, complete assumption and presumption basis which these amounts have been quantified. You will have to indicate your actual facts to say that actual transactions are so and so, and those are either not covered under Section 17.5 or not hit by that particular restriction. In case of cancelled dealers, return defaulters, and tax non-payers, again, it is a session by itself. I will just summarize it to say that, look, see, we have enough settled jurisprudence to say that if the department is alleging that out of your 100 suppliers, if let us say department is saying that 5 suppliers are defaulters, and department is saying that you have cancelled their registrations with a retrospective effect, that is prior to the date on which you had made the purchases, and therefore the credit which you have availed from those suppliers is not eligible under the law. Is this a sufficient ground for the department to make the recovery is the issue? settled jurisprudence indicates that in a situation where such a serious allegation is framed against the taxpayer, that is the recipient, then the taxpayer is supposed to be given all the relied upon documents. Which will be the relied upon documents in this situation? It would be the registration cancellation certificate number 1, basis which the department has reached that conclusion that that taxpayer was indulged in fake billing activity or whatever be the case. The spot visit memo, the visit done by the department and basis which they have arrived at that conclusion on which date visit was done. Your transaction pertains to 1890. Department might have visited the taxpayer's premises in 2021 and found that those premises are locked. And on that basis, assume that from day one, this taxpayer is indulged in fraudulent activity. Again, something which can only be confirmed with, via the records which are shared by the department with you. Statement of the supplier or the transporter or any other person found during the departmental proceedings, maybe search or whatever is the case. So unless all those relied upon documents are not given, basis which the cancellation of registration has happened, basis which the department is now saying through this notice that the credit which you have availed from those suppliers is not eligible, there is no way you can respond to this notice. So the first response that you need to give to such notice is first to ask for all those relied upon documents. If no relied upon documents are given, the department only says that, look, according to us, this is a cancelled dealer. According to us, this is a defaulter and therefore no credit is eligible. Despite you asking for copies of documents, copies of statements, everything, then to my mind, certainly a gross injustice can be said to have taken place. And therefore, that becomes your contention for the next stage of appeal, where you can indicate that despite asking for relied upon documents, despite asking for all the evidences basis which this conclusion or this allegation was framed against the taxpayer, no document has been given, and still the demands of ITC have been confirmed. So again, this is very important. Please ask for all the documents pertaining to those dealers which are indicated in the notice, whose registration department is alleging to have been cancelled with a retrospective effect. Please ask for those documents. Please also ask for the cross-examination of the concerned witnesses which are part of those proceedings. Because again, you have your inward supply. You have all the evidence to indicate that the supply was genuine. Merely because he has defaulted, your supplier has defaulted or he has contravened the provisions of the law. Only on that basis can your credit be denied is something which courts will have to consider. But natural justice is a very strong ground. You will certainly be focusing on this larger ground of 16(2)(c). But again, apart from that, kindly also focus on this ground, where prepare the records to indicate that you have sought all those relied upon documents. And despite that request, no documents have been given, nothing has been given, and merely based on one-sided allegation, the demands are confirmed. You will have a very strong case at an appellate forum to say that in that situation, your claim of credit cannot be disputed. So you will find various decisions in this presentation. I am not going to take you through those decisions because of the paucity of time, but you will find that we have series of decisions where the courts are saying that all those documents, everything has to be given only basis this a serious allegation can be framed. Right of cross-examination should also be there, given if it is asked for, and accordingly the demands can at all be confirmed. Again, we have court decisions to say that recovery has to happen from supplier first. So there also department has to have documents to indicate that they have in fact made attempt to recover the tax from the supplier, and only failing that they are now traveling to the recipient end to recover the credit. So these are the decisions that one can of course consider while responding to this point. Now, so way forward, what I would indicate before I take you through the last 15 minutes of the presentation is like this, that please consider all the grounds which are available. Don't limit yourself only to the grounds on merits. You may have very strong merits of your case, but you never know the way department is going to pass the orders. So kindly also incorporate all legal grounds that we discussed in last 1.5 hours. Kindly incorporate all those grounds in your submissions. Let the department give their findings on those grounds. Even if they don't give findings on those grounds, once the grounds are taken, And once they form part of the adjudication proceeding, certainly those non appreciation of those grounds or no findings on those grounds will certainly aid positively to your case once those cases are then taken up in appeal at the subsequent stage. Exercise the right of personal hearing. Even in absence of that, as we indicated, if the department intends to pass an adverse order, personal hearing is must. And then if you get an order, examine the order and then determine the appropriate remedy. Now let me, last 15 minutes before, if time permits, I can have 5-10 minutes of question answer. But let me just indicate 2-3 important issues that are arising in appeals that you will have to deal with against the orders which are passed against the kind of notices that we saw. Now, when you deal with appeal, please understand that appeal is not the only remedy available. We have a remedy available under Article 226. Now, what is that remedy? Constitution has given the power to the High Court to issue a writ to any authority, including the GST authorities, in certain situations. Now, when you compare this provision with the statutory appeal remedy that we have, what is the distinction? The major distinction is that appeal is your statutory right. It is you who have to exercise that right. Writ is something where you go to the courts asking the indulgence of the court. It is not a right which you can expect to be given to you. Only in a fit case, the court will show indulgence. In an appeal, the appeal has to be accepted because that is your statutory right coming out from a statute. A petition under Article 226 is not a statutory right. It is at the discretion of the court. If the court finds merit in your case to say that this is a petition worth admitting, only in those situations, the courts are going to admit those petitions. Now, which are those situations where the courts generally entertain the petitions in the context of taxation laws? Now, when you look at the situations, this is a latest decision that one can consider. This is the same principle you will find in series of decisions, but just for reference, I have referred to this commercial steel decision. What Supreme Court says, this is in the context of tax matters. There are 4 situations where the alternate remedy will not be an absolute bar on the maintainability of the writ petition. Which are those 4 situations? One is a breach of fundamental rights. Now, what fundamental right can be breached in such situation that we are discussing? As we discussed, let us say the claim of credit is sought to be denied on the basis that the supplier has indulged in fraudulent activity and the supplier has failed to pay the tax. If that is the situation basis which the ITC is sought to be recovered, then as we discussed earlier, there is a larger issue which is there in the courts, is that whether it violates Article 14 of the Constitution in a sense that is it manifestly arbitrary or is it discriminatory when the provision doesn't discriminate between a genuine buyer and a fraudulent buyer. So if this is the issue that you want to contest upon, it is a breach of fundamental right. Then on that ground, you can seek the indulgence of the court under Article 226. But please understand, this is not something which is always to be given to you. It is discretionary. I will at the end also summarize the broad framework which you should have in terms of dealing with such matter. But first is where a fundamental right is breached. Second is violation of principle of natural justice. So in a situation where, let us say, adequate opportunity of hearing is not given, submissions are filed but not considered, those are all the situations where natural justice has not happened. Rely upon documents are not given despite asking for the documents. So these are the situations again where if the orders are passed, these are in violation of principles of natural justice. Third is access of jurisdiction. So let us say what we discussed earlier, that already that subject matter is been seized by the central GST authorities. And on that same subject matter, again, the state authorities by virtue of these notices are seeking to recover the credit or the tax. This is again a jurisdiction which is in excess of what is permitted under the law. Section 6(2)(b) categorically states that once the jurisdiction has been assumed by the other authority, then the state cannot assume the jurisdiction on that same subject matter. So again, in this situation, the remedy under Article 226 would get available. The third is when you want to challenge the vires of a statute or a delegated legislation. So in a situation where, let us say, by virtue of this demand which is sought to be made against you, if that is in law, that is in CGST Act or by way of notification permissible, but you want to challenge the virus of that statute itself by saying that that provision either violates any of the article of the Constitution, then in that situation, or a delegated legislation, that is the rule violates any of the provision of the statute or is contrary to the statute, if that is the kind of challenge that you want to get into, then Article 226 is available. So these are the only 4 situations where the courts would directly entertain a petition and alternate remedy would not be an absolute bar. Barring these 4 situations, in all other situations, appeal would be the only available remedy, the statutory appeal, which is envisaged under Section 107 of the CGST or the SGST Act. Now, when do you exercise this remedy? It calls for wisdom. It is not a case where automatically, if you find yourself in any of these 4 situations, you automatically rush to the court and ask the indulgence of the court. Please understand this aspect well in your mind, that you have to strategically analyze the strong points of your case and the weaknesses of your case, and basis which a professional call will have to be taken, considering the weaknesses that you have in your case, that is it then in that situation better to exercise a writ remedy and seek a larger remedy in terms of approaching the High Court, or through the statutory scheme itself, you would be able to sail through, in a sense that you will be able to mount a defense which will ultimately find acceptance with the authorities, or maybe in future the quasi-judicial or judicial authorities, and it is through that channel that you want to ultimately build your case. So it's a professional call that one has to take, considering not just the law, but also the practical side of it, considering the situation involved, the merits of the case, and accordingly a call needs to be taken as to whether it makes sense to challenge the notices before the court, or it makes sense to respond to the notices, obviously preserving all the issues that we have discussed in this presentation. So this is first aspect that you must keep in mind. Second important aspect that I want to discuss before I end is concerning the pre-deposit. Now, see, there is a huge issue going on now across India on this aspect of pre-deposit. Now, why this aspect is arising is because the way in which Section 107 subsection 6 has been worded. Now, see, the bigger worry for any taxpayer is that if an adverse order is passed and if you want to exercise the appeal, he has to pay an amount and then only the appeal will be admitted, which is that amount which is to be paid, which is stated under subsection 6 of 107. What it says, that no appeal shall be filed under subsections 1 unless the appellant has paid in full such amount of tax, interest, fine, fee and penalty arising from the impugned order as is admitted by him, and a sum equal to 10% of the remaining amount of tax in dispute. This is capped at up to a maximum of 25 crore rupees. In case of e-way bill matters, the amount is, instead of 10%, it is 25% of the penalty. So, in a way, what subsection 6 says, that you have to pay the admitted dues entirely, and the disputed dues, you have to pay 10% of the tax amount of the disputed dues, subject to maximum of 25 crore rupees. So this is the provision that we have. Now, what is the issue? The issue which is arising is the manner in which I can pay this amount. Now, where is that issue? The issue that is arising is because of these decisions that we have. Let me just take you through those decisions straight away. There are 3 very important developments that happened in the Patna High Court recently, and very interesting. In the first case that came before the Patna High Court, in the case of Flipkart Internet Private Limited, Patna High Court in September 2023 took a view that the pre-deposit under the GST law will have to be paid compulsorily by cash. That is only from cash ledger. So today we have a situation where, let us say, your client is having credit balance also, and through that credit balance, he is able to pay this 10% of the disputed amount for purpose of filing the appeal. Question is, can he do that? Patna High Court in Flipkart Internet Private Limited takes a view that it cannot be done. It relies on the decision of the Orissa High Court, where Orissa High Court had taken a view that under section 107 subsection 6, what is to be paid is any sum equal to 10% of the disputed amount of tax. The High Court takes a view that what is paid is a sum, not tax. Then it goes back to section 49 and sees section 49 and subsection 4 and says that the balance which is available in the electronic credit ledger can be used only for paying output tax. And therefore, the High Court reasons that since law permits the credit ledger to be used only for paying output tax, and what is asked by the statute under section 107 subsection 6 is a sum which is equal to 10% of the disputed tax, both are different in nature. And therefore, the High Court takes a view that balance in the credit ledger cannot be used for paying this deposit, and it has to be compulsorily paid through cash, because unlike credit ledger, cash ledger can be used for paying any tax, interest, penalty or any other amount. And therefore, High Court says that any other amount covers such situation, and therefore it is only through cash ledger that the deposit can be paid for exercising this appeal. Matter went to Supreme Court. Supreme Court immediately stayed that portion of the decision of the Flipkart Internet Private Limited, where the High Court had taken a view that compulsorily the deposit has to be paid only from cash ledger. Then again, another case went before the same Patna High Court in the case of Friends Mobile. Interestingly, in the Friends Mobile, the High Court takes a diametrically opposite. What view High Court takes in the Friends Mobile case? In Friends Mobile case, it recognizes that originally in Flipkart Internet, the division bench had taken a view that only from cash ledger deposit can be paid. That portion has been stayed by Supreme Court. However, it has not been reversed by the Supreme Court. Considering that history, Patna High Court then goes to the notification which was issued recently in the context of amnesty for the belated filing of the appeals. As many would be aware, there is a scheme which has been formulated by the government through GST Council, where for the cases where the orders have been passed on or before 31st March 23, the scheme says that if either you have not filed the appeal or you have filed belated appeals, those matters can again be reinstated if they have been thrown out on limitation, or it can be permitted to be filed before 31st January 2024, which is the cutoff date for that scheme, provided that you pay an additional pre-deposit of 2.5%. So over and above 10%, you have to pay additionally 2.5%. In all, you have to pay 12.5% of the disputed tax dues. Interestingly, that notification says that additional amount of deposit has to be paid compulsorily through a cash ledger. Patna High Court therefore reasons that, look, the government itself acknowledges in the notification that only 2.5% is what is to be paid through cash ledger, and therefore implies that the normal 10% can be paid even through a credit ledger, and therefore comes with a finding that, look, when the government itself is saying that in such situation what is to be paid through cash ledger is only minimum 2.5%, and therefore the Patna High Court in Friends Mobile takes a case that pre-deposit for filing the appeal can also be paid through credit ledger in absence of any bar in the provisions of the law. Still, the issue is not over. We will still have other high courts to have their view on this. Bombay High Court has taken a view that pre-deposit can be paid through cash credit ledger, subject to the fact that the issue involved, the disputed amount, is towards output tax. That is the view of the Bombay High Court in the case of OSS Reality. Now, how I look at this entire situation? I look at this entire situation this wise, that undoubtedly section 107 subsection 6 uses the word a sum equal to 10% of the disputed tax. So, if the disputed tax is towards output tax, then certainly one can say that what is a sum is of the nature of output tax, because it is derived on the basis of that amount. And therefore, credit ledger can be used for paying any output tax, and therefore credit ledger can be used for making such payment of pre-deposits. However, where the dispute relates to credits which have been already utilized. So take a situation where a section 17(5) case is involved. You have availed the credit wrongly utilized. Now, by virtue of this proceeding, it is now sought to be recovered. And now you want to go into an appeal. Now, in that situation, what you are actually paying is not output tax. What you are actually paying is the credit which was wrongly utilized. Now, that technically cannot be paid through credit ledger. Through credit ledger, you can only discharge the credit which has not been utilized, which has been retained in that ledger. That can be perhaps reversed. But credit which has already been utilized, that from credit ledger now cannot be paid. That is, in a way, you cannot substitute your today's eligible credit with the earlier wrongly availed and utilized credit. So to my mind, one has to be cautious. And while filing the appeal, if the dispute is on the output tax side, then one can very well pay the pre-deposit through credit ledger. I don't find that I don't find any difficulty on that proposition. But where the dispute is on the input tax credit side, in that situation, to my mind, it is advisable to pay the pre-deposit through cash ledger and not get into this entire conflict of paying it through credit ledger, and in future, ultimately courts taking a view that it cannot be paid through credit ledger, it had to be paid compulsory through cash ledger. So this is again some important point that you must keep in mind. This is again very important. This is something just a food for thought. But I think we have many senior advocates also today on this webinar. So I think this would be very interesting and important for them to also participate and perhaps throw some light on this aspect. See, the entire pre-deposit, still to my mind, the trade is yet to feel the impact of the pre-deposit that we have in this law. If you see the quantum of pre-deposit that we have in GST law is humongous. 10% to be paid at the first stage, additional 20% to be paid at the second stage. So imagine a case where a small trader is there. He is having a business where his margins are in single digits. This is the tax on turnover. Now he is slapped with a notice where his yearly income could be 10 lakhs. He is visiting a notice where his liability of tax is 2 crores. Why? Because the tax is on turnover and not on the profits, unlike income tax. Now the demand may not sustain on merits, but to litigate the demand of 2 crore of tax, he will have to pay 20 lakhs deposit at first appellate stage. If let us say he is unsuccessful at the first appeal stage, and if he wants to contest the demand at the tribunal, he has to pay additional 40 lakhs so as to permit him filing the appeal before the tribunal. So imagine a situation where if he wants to dispute a demand of 2 crore, he has to block working capital of 60 lakhs for the purpose of contesting that demand. And ultimately he may win, but that is 5-6 years down the line. To that extent, that amount would get blocked. Now, in the excise era, we had similar pre-deposits. This concept came into existence from 2015, where the government thought that instead of giving liberty to the appellate authorities to decide the quantum of pre-deposit, let us statutorily decide the quantum of pre-deposit. So in the excise context, the provision were mooted, where 7.5% was to be paid at the first appellate level, and additional 2.5% was to be paid at the second appellate level, that is at the tribunal level. So now from that 10%, we are at 30%. 3 times the amount of deposit has been enhanced. Now, when this matter traveled to Supreme Court in the case of Satya Jha, where the validity of this provision was challenged, where the defense was mounted on the basis that, look, this 7.5%, 2.5% is atrocious. For a genuine litigant, for a genuine taxpayer, from where he will manage these funds, and in absence of these funds, he loses the statutory right of appeal. So how can law be that much atrocious to apply in such situation? Supreme Court turned down that challenge on the basis that, look, considering the history of success of department at the tribunal stage, where Supreme Court reasoned that generally in 1 case out of 10 the department succeeds, and in 9 out of 10 the taxpayer succeeds. Looking at those aspects, the Supreme Court says in this decision that 10% seems to be reasonable. It does not seem to be arbitrary or unreasonable. So basis that, the challenge was turned down. Now, in a GST, this has to be again revisited, because instead of 10%, we are facing a situation where the quantum of pre-deposit is 3 times of that amount, 30%. Now, with 30%, can courts still find this amount to be reasonable, especially in situations like what we are discussing today, where completely without grounds, baseless notices are getting issued based on just comparison of written data and basis which the orders are getting passed. So this is something which certainly one has to consider, because otherwise this can lead to a situation where if a person is not having means to pay this amount of deposit, he may lose the right of filing an appeal. So here again, if you are facing such situations, then to my mind, Article 226 can be exercised. Indulgence of court can be invited to look at this entire quantum and decide that whether this is reasonable, considering that in the past we only had a deposit to an extent of 10% of the dues. We have isolated decisions of the courts, you can see on your screen, where the courts have shown indulgence even in the past, where the mandatory pre-deposits were in force, where in fit cases, especially these are cases where because of financial difficulties, the taxpayers were not in a position to pay those pre-deposits. In those situations, courts have shown indulgence and they have permitted the taxpayers to exercise their right of appeal subject to certain additional conditions in absence of pre-deposit. So, but these are again isolated cases where courts have shown indulgence, but this larger issue is still open as to whether this 30% amount, which we now have in GST law, especially considering the way in which the orders are getting passed without considering, appreciating the issues which are put before the authorities, is there now really a need to really again re-examine the validity of this provision. So with that I end. I again thank AIFTP North Zone, to the office bearers of AIFTP North Zone, to the seniors, to the friends for a very patient listening. Perhaps we may have 5 minutes or so still left. So if anyone has any questions, if organizers permit, we can certainly take a couple of them.
Thank you so much, Abhay sir, for a wonderful session full of judgments and the jurisprudence and raising a number of issues. Now I request the participants, if they have any issue or any doubt to be asked to the speaker, so they are most welcome to please write it in the chat box, or else can unmute and ask the query.
Well, they can raise their hands. I think we have to unmute them.
Yes, certainly. Advocate Manish Kumar ji has raised his hand. So,
नमस्कार मैम।
जी नमस्कार जी।
सर से एक सवाल पूछना चाहता था। जैसे हम डिस्कस कर रहे थे 17-18 के जो फाइनेंशियल ईयर के जो केसेस है उनका फैसला कुछ ऑफिसर्स की तरफ से दिया गया है, तो हमें ऑन पोर्टल जो है फैसला 1 जनवरी 2024 में मिला है। तो जैसे सर ने बताया था कि 31 दिसंबर वाज द लास्ट डेट, तो एक दिन लेट हमें फैसला मिला है। अगर हम अपील में जाते हैं और उनको अगर इसको चैलेंज करते हैं तो क्या वो एंटरटेन हो सकता है?
देखिए, ये केस में जैसे हमने देखा वैसे कट ऑफ जो था ऑर्डर इश्यू करने का 17-18 का, वो 31 दिसंबर था
जी।
31 दिसंबर के बाद एक दिन भी वो डिले नहीं कर सकते। यदि उन्होंने 1 जनवरी को ऑर्डर इशू किया है तो वो मेरे हिसाब से वो नल एंड वॉइड है, वो ऑर्डर लीगली सस्टेन नहीं करता। तो आप ये इशू हाँ जी
जी बताइए, पूरा कर लीजिए बात को।
ये इशू आप रिट कोर्ट में भी जा सकते हैं, जैसे मैंने बताया कि जहां पे ये एक्सेस जुरिस्डिक्शन है, जहाँ जुरिस्डिक्शन ही नहीं था ऑफिसर को ऑर्डर इशू करने का, लिमिटेशन लॉ का खत्म हो चुका था, उसके बाद भी यदि ऑफिसर ने जुरिस्डिक्शन एज्यूम किया जो वो कायदे से नहीं कर सकते थे, तो इन दैट सिचुएशन यू कैन डेफिनेटली टेक इट एज अ पार्ट ऑफ चैलेंज, जो आर्टिकल 226 में आप फाइल कर सकते हैं, या अपील में भी सर्टनली ये ग्राउंड आप लेंगे तो मुझे लगता है कि ये आपका ग्राउंड अलाउ होना चाहिए। बिकॉज कोई भी एक्सक्यूज हो, मैं कहूँ ऑफिसर के पास कोई भी एक्सक्यूज हो, सिस्टम में खामी हो, जो भी हो, नोटिफिकेशन या सेक्शन नहीं अलाउ करता उनको एक भी मिनट का डिले बियॉन्ड रात को 12 बजे ऑफ 31 जनवरी दिसंबर। सो वो एक बार क्रॉस हो जाता है, उसके बाद यदि ऑर्डर इशू होता है तो वो ऑर्डर नल एंड वॉइड मेरे हिसाब से रहेगा।
डिपार्टमेंट ने अपनी तरफ से एक काम किया है कि क्लाइंट को उसके व्हाट्सएप के ऊपर 31 दिसंबर को शाम को मैसेज पोस्ट कर दिया पीडीएफ फॉर्मेट में, लेकिन ऑन पोर्टल जो है वो 1 जनवरी से ही शो कर रहा है, और उसका मैसेज ऑफिशियली ईमेल के ऊपर भी जो है 1 जनवरी को ही मिला है। तो ठीक है, इसको
मैं
हम
समझता हूँ सेक्शन 169 सबसेक्शन 1 में व्हाट्सएप से कोई नोटिस भेजने का प्रावधान नहीं है,
यस
या नोटिस
यस
भेजने
यस
का
यस
कोई प्रावधान नहीं है। और वैसे
बिल्कुल
भी
सर।
अनसाइंड हो या ऐसा कुछ डॉक्यूमेंट भेजते हैं, वो वैसे भी उसको हम ऑर्डर भी गिन नहीं सकते, जो भी उन्होंने व्हाट्सएप से शायद भेजा हो। सो ऑर्डर वही गिनेंगे जो आपको 1 जनवरी को मिला है, और क्योंकि
ठीक
वो
सर,
1
बिल्कुल
जनवरी को
ठीक है,
इश्यू हुआ है, तो मेरे हिसाब से ये ऑर्डर सस्टेन लॉ में नहीं करेगा।
सर यू
बिल्कुल
आर
ठीक है सर,
आई
बिल्कुल,
थिंक।
थैंक यू सो मच सर। एक एक छोटी सी और बात पूछनी थी। कुछ फैसलों के दौरान ये पाया गया है कि ऑफिसर अगर किसी ने से फॉर एग्जांपल 2022 में आईटीसी को यूटिलाइज कर लिया सिर्फ 1 महीने के लिए, गलती से कोई मतलब क्रेडिट लेजर में बैलेंस लगभग समझ लीजिए 20,000 से नीचे आ गया, तो उसको यूटिलाइज अगर किया गया सिर्फ 1 महीने के लिए, तो उसका अगर वो इंटरेस्ट चार्ज करते हैं तो पूरा आज की डेट तक करना बनता है या सिर्फ 1 महीने का ही बनता है?
देखिए, जहां क्रेडिट आपकी यूटिलाइज हो जाती है, वहां जिस तरह से उन्होंने इंटरेस्ट कैलकुलेट करने का जो नियम बनाया है, वो
जी, मैं
नियम तो
नियम की
यही,
बात कर रहा हूँ सर। जी
हाँ
जी
हाँ, वो नियम तो यही कहता है कि एक बार आपका वो क्रेडिट यूटिलाइज हो गया, तो वहां से जो इंटरेस्ट गिनना शुरू होगा, वो जब तक आप उसको पे करेंगे तब तक वो रहेगा।
और सर
बाद
ये
में जो आपने,
जेन्युइनली जी
हाँ जी,
जी जी पूरी करिए बात सर। जी जी
हाँ जी, तो
जी
बाद में जो आपने क्रेडिट लिया अगले महीने, वो क्रेडिट से आप ये नहीं कह सकते कि वो क्रेडिट मैंने उसके जगह स्वैप किया और उसके वजह से केवल 1 महीने का ही इंटरेस्ट लगना चाहिए। वो एक बात में मैं, मेरा मानना है कि इंटरेस्ट पूरा लगेगा।
जी जी
लेकिन इसमें एक एस्पेक्ट है जो आपको कंसिडर करना चाहिए, कि इसमें
जी
तीनों हेड मिला के आपको देखना है। CGST,
ओके
SGST, IGST, तीनों का एग्रीगेट आपको कंपेयर करना
ओके
है। जो आपने आईटीसी गलत लिया था और यूटिलाइज हुआ, यदि तीनों हेड का एग्रीगेट आप देखते हैं, उसमें
जी
यदि आपका ये सिचुएशन बाहर आती है
ओके
कि वो
ओके
अनयूटिलाइज ही रहता है टू दैट
जी
एक्सटेंट, तो मेरा मानना है कि इंटरेस्ट इसमें नहीं लगना चाहिए।
जी जी धन्यवाद सर, थैंक यू सो मच, बहुत बढ़िया सर आपने बताया, और ये बहुत हमारे लिए बहुत ज्यादा बेनिफिशियल होने वाला है सर, आज का जो सेशन आपने
थैंक
जो बताया है,
यू।
रियली थैंक यू सो मच सर, थैंक यू सो मच,
थैंक यू सो मच
थैंक यू।
मनीष, कैन वी मूव ऑन प्लीज?
Amit Bazadji has raised his hand, so if he wants to ask, and then Ashok Thakkar ji, followed by Amit ji.
Amit ji, I'll
Amit ji, kindly ask your question. You have raised the
you have
hand.
to,
If
I've
any,
requested him to unmute.
यस यस सर। सर मेरा 2-3 क्वेश्चन है। एक तो सर 16.4 के ऊपर थोड़ा सा आप कर दें हाईलाइट के 16.4 की क्या व्यू है
अमित
जो
जी, अमित जी 16.4 के ऊपर हम एक अलग से सेशन लेंगे सर।
ओके चलो दूसरा।
देखिए, 16.4 में आपको मैं एक एक लाइन में बता दूं कि वो आपका एंटाइटलमेंट क्रेडिट लेने का तय करता है, और वो एंटाइटलमेंट आपके बुक्स डिसाइड करता है। तो यदि आपके 2A में क्रेडिट रिफ्लेक्ट हो जाता है और आपके बुक्स में उसका क्लेम रिकॉर्ड हो जाता है, नियरली 3B में आपने लेट उसको शो किया, उससे मैं नहीं मानता कि क्रेडिट आपने लेट लिया एज फार एज 16.4 इज कंसर्न। सो वो ग्राउंड पे आप डिफेंड कर सकते हैं। अभी हाल में मद्रास हाईकोर्ट का आपने देखा होगा,
यस
केविन एनर्जी का डिसीजन है, उसमें भी उन्होंने 2A के बेस पे 16.4 को पढ़ा है। तो मैं समझता हूँ कि ये ग्राउंड पे आप कंटेस्ट
एंड
कर
सर एक
सकते
चीज और इसमें है कि सेक्शन 41 जो है अवेलमेंट का, अवेलमेंट ऑफ आईटीसी, इट सेज दैट यू हैव टू अवेल आईटीसी थ्रू जीएसटीआर 3B। तो 1641 डज नॉट ले डाउन एनी लिमिटेशन फॉर अवेलिंग द आईटीसी। 3B में कब लेना है? 16.4
राइट
आपकी बात ठीक है, वो 40 अवेलमेंट इज डिफरेंट
राइट
एंड
राइट
एलिजिबिलिटी इज डिफरेंट। तो
एब्सोल्युटली
41 में कोई लिमिटेशन ही नहीं है कि कब लेना है या कब नहीं लेना है।
राइट।
सर सेकंड है कि एक तो स्क्रूटनी जो 2-2 बार कर रहे हैं डिपार्टमेंट, वी आर गेटिंग रेपिटेटिव नोटिसेस ASMT 10, उसकी क्या वैलिडिटी है अब? वेदर इट कैन अपीयर
देखिए,
टू द
राइट,
ऑफिसर 2 times that
तो
he has
उसमें
found
देखिए, राइट राइट, इसमें देखिए, यदि ASMT 10 इश्यू हुआ है और उसमें उन्होंने इश्यू को ड्रॉप किया है ASMT 12 देके, तो मैं समझता हूँ वो एक फाइनल कंक्लूजन है वो इश्यू का। वो इश्यू को दोबारा दूसरे प्रोसीडिंग में वो वापस से उसको खड़ा नहीं कर सकते।
न्यू इशू को ले सकते हैं हम।
नया इश्यू ले सकते हैं उसमें, ऑब्वियसली सब्जेक्ट टू बार ऑफ दैट प्रोविजन, जहाँ जो भी प्रोविजन एक्सरसाइज करके वो नया इश्यू लेना चाहते हैं वो ले सकते हैं
बट देयर
उसमें।
शुड बी सम एंड टू सम this litigation 16(4) sorry अपना 61 जो है section, you invoke it again and again and you
अल्टीमेटली देखिए 61 तो है, वो तो बेसिकली एक सेक्शन है रिटर्न स्क्रूटिनी करने, इवेंचुअली जो भी डिमांड उनको रेज करनी है वो 73 या 74 में ही हो सकेगी, और वहां पे लिमिटेशंस ऑलरेडी लॉ में इन प्लेस है, तो एंड ऑफ डे उसके बियॉन्ड तो 61 को इन्वोक नहीं कर पाए।
एक सर थर्ड एक क्वेश्चन हो रहा है रिगार्डिंग रूल 42 एंड 43 और 17(2) की जहां तक बात है, तो उसमें क्या है कि कुछ लोग जैसे मैन्युफैक्चरर है, और मेरे पर्टिकुलर फैक्ट्स के ऊपर क्वेश्चन है, मैन्युफैक्चरर है, ही इज मैन्युफैक्चरिंग टैक्सेबल एंड टैक्स फ्री गुड्स एंड साइमल्टेनियसली ही इज आल्सो डूइंग ट्रेडिंग ऑफ टैक्स फ्री गुड्स। अब हम फॉर्मूले की बात करें तो फॉर्मूले में द ई एंड एफ जो एग्जम्प्ट सप्लाई और टोटल एग्रीगेट टर्नओवर की बात करता है, तो इट टेक्स द एग्रीगेट टर्नओवर ऑफ द एग्जम्प्ट सप्लाईज,
राइट।
and अगर if we take the factoring of trading activity, trading sale purchase also, then the reversal comes more than what is
right, I appreciate, yes, yes.
तो वो एक point है
उसमें। see how we have dealt with this situation, see what we are saying is that कब नीड अराइज होती है रूल 42 में जाने की, वो तभी अराइज होती है जब 17(2) में आपने जो क्रेडिट का क्लेम लिया है उसमें पाया जाता है कि वो क्लेम एग्जेम्प्ट सप्लाई को एट्रीब्यूट करता है।
Yes.
एट्रीब्यूट जो वर्ड यूज किया है 17(2) में, उसका आप यदि डिक्शनरी डेफिनेशन देखेंगे तो वो है कि उसका नेक्सस होना चाहिए एग्जेम्प्ट सप्लाई के साथ। तो कॉमन क्रेडिट यदि एक बार आप लेते हैं जिसका नेक्सस एस्टेब्लिश होता है, या डायरेक्ट क्रेडिट लेते हैं एक्सक्लूसिवली जो एग्जेम्प्ट सप्लाई के लिए, तभी आपका 17(2) ट्रिगर होता है।
मैं वही सॉरी
तो हम क्या इसमें व्यू ले रहे हैं कि यदि मान लीजिए ट्रेडिंग सप्लाई के लिए आपके पास और कोई मापदंड है क्रेडिट को बांटने का, जैसे आप कह रहे हैं कि ट्रेडिंग सप्लाई में प्रैक्टिकली कोई क्रेडिट या कोई इनवर्स सप्लाई वैसे उसमें यूज होते नहीं, या जो भी हो रहे हैं उसका अपार्ट फ्रॉम टर्नओवर कोई अल्टरनेट बेस है। जैसे मैं आपको बताऊं कि फाइनेंशियल इंडस्ट्री है, उसमें रेंट का जो खर्चा होता है उसमें भी ट्रेडिंग इन सिक्योरिटीज को उन्होंने एग्जेम्प्ट सप्लाई माना हुआ, अब करोड़ों रुपए में वो ट्रांजेक्शन चले जाते। अब वो बेसिस पे यदि मैं रूल 42 अप्लाई करता हूं तो करोड़ों रुपए का क्रेडिट रिवर्सल आ जाता है। मैं जानता हूं कि जो ट्रेडिंग एक्टिविटी हो रही है वो मेरे जो टोटल ऑफिस एरिया में है उसमें 5% एरिया में ही हो रही है, बाकी 95% एरिया में कोई और एक्टिविटी हो रही है जो टैक्सेबल है। तो उसमें फिर हम एरिया वाइज उसको क्रेडिट को डिवाइड करते हैं। अब मान लीजिए वो बेसिस पे मैंने 95 ही लिया मेरे 3B में एज अ क्लेम, तो वो 95 तो पूरा मेरा एट्रीब्यूटेबल है टैक्सेबल सप्लाई। तो वहां पे हम ये व्यू ले सकते हैं कि क्योंकि मेरा पूरा टैक्सेबल सप्लाई के लिए एट्रीब्यूटेबल है, तो 17(2) में कोई क्रेडिट मेरा ऐसा मैंने लिया नहीं है ये टैक्स पीरियड में जहां पे कोई एग्जेम्प्ट सप्लाई के सामने कोई एट्रीब्यूशन है। जब क्रेडिट ही नहीं है एग्जेम्प्ट सप्लाई के सामने तो रूल 42 में जाने का फिर जरूरत नहीं पड़ता। तो वो एंगल से आप क्रेडिट उतना ही लीजिए जितना आप जो अदरवाइज जो आप कह रहे हैं यार्डस्टिक जिसके बेसिस पे आप ले पा रहे हैं। मुझे लगता है कि इट कैन बी, और हमारे पास एक ट्राइब्यूनल का डिसीजन भी है फूड फैट्स एंड फर्टिलाइजर, वो आप डिसीजन देखेंगे उसमें भी जब रूल 6 में इस तरह का जो चैलेंज था उसमें ट्राइब्यूनल ने ये व्यू लिया हुआ है, जब सेपरेट मैकेनिज्म तब रूल में आया नहीं था कि और कोई मैकेनिज्म थ्रू भी आप क्रेडिट को कॉमन और टैक्सेबल के सामने आप बांट सकते हैं। उसमें ट्राइब्यूनल ने 2009 में व्यू लिया हुआ है फूड फैट्स एंड फर्टिलाइजर के केस में कि आप अल्टरनेट बेस से भी आप जब क्रेडिट नेट ही ले रहे हो जो टैक्सेबल या एक्साइजेबल गुड्स के सामने था वो जमाने, सो इन दैट सिचुएशन फिर वो कॉमन फॉर्मूला अप्लाई इसमें नहीं हो सकता।
और सर 17(2) में वर्डिंग भी यही है, वेयर द गुड्स और सर्विसेज और बोथ आर यूज्ड बाय द रजिस्टर्ड पर्सन पार्टली फॉर फैक्टरिंग टैक्सेबल एंड इंक्लूडिंग जीरो रेटेड एंड पार्टली फॉर द एग्जाम सप्लाई। तो
Amit ji, just I'm sorry I'm interjecting. Amit ji, rule 42 की जो लैंग्वेज दी हुई है that is already under challenge before the High Court.
Okay,
sir. Rule 42 runs contrary to section 17(2). This is to my mind. I think that's wrong. This is
yes.
where the problem is.
Yes, this is what I'm pointing out. Okay, 17(2).
It's already under challenge.
Okay, it's already under challenge. Okay.
Already under challenge. So can we move on, sir?
Okay, thank you, sir.
Sir, I just add a little pointer to it. Sir, I need your consideration regarding Rule 42. Now, let's suppose a unit is a division is having two divisions. A unit is having two divisions, say solvent and the sheller. So now there is a input which is coming in the sheller. So do we need to apply a overall ratio considering the sheller turnover and the solvent, or only the solvent turnover? I particularly highlighted this point because from the Hyderabad, all India PAN jurisdiction, the notices are getting issued on this point, that 42 reversal should be done taking the aggregate of solvent and the sheller, whereas an input is meant only for the solvent. So your views, and Sandeep.
See here, what I would say that again 17.2 only suggests a direct nexus with the taxable outcome. Post that outcome, if let us say there is a further process which is applied and which ultimately leads to an exempt supply, that cannot be the ground to say that it is a common credit and therefore take into that ambit of Rule 42 and apply the turnover ratio. So, to my mind, eventually you have to look at the first product emerging out of the use of those inputs. If that is a taxable goods, then at that end the Rule 42, 17.2 application ends vis-a-vis that credit is concerned. And subsequently, if those taxable goods are used to make exempt goods, and then those exempt goods are supplied, then that cannot be the ground to turn back and apply Rule 42 and take that turnover also into consideration.
Anchal, even if we go by Rule 42, I think Mr. Abhay is absolutely correct. Even if you go by Rule 42, the calculation of the common credit has to take place in the first place. I mean, you have to calculate that.
Sandeep sir, the place is first place only. If you see that you use the particular product X and you are getting two products, one is taxable, one is exempt. For the second also, one is taxable, one is exempt. But the issue is the overall ratio of the concern or unit-wise ratio of the concern under the same GSTN number. So this is
what we are saying. So in case you are purchasing rice, and I mean you are purchasing paddy and you are extracting rice out of it, the credit of the solvent plant, you are purchasing only the taxable product. So that credit is nowhere going to the rice sheller at all. So in that scenario, there is no common credit which is actually flowing to the rice sheller unit. So there is no question of application of common credit, and therefore T4 would have to be calculated by reducing that amount.
Absolutely.
All right. Actually, sir, rice bran is used for both rice bran oil also and DOC also. So for every input, we are getting one taxable output, one exempt output. So
here the problem is there. Therefore, Rule 42 is under challenge. That problem is there. You're absolutely right.
Right, sir. So now moving forward, Ashok sir, you kindly unmute yourself.
I'll do that.
Right.
Hello.
So can we be a little brief?
Hello.
Sir.
Hello, good evening, sir.
जी जी
आवाज आ रही है?
जी बिल्कुल आ रही है आवाज सर, बोलिए।
अशोक जी, yes we can hear you।
ये था सर कि आपने अभी बताया कि ये जो नोटिस दिया है उसमें DRC 01 डायरेक्ट दे दिया है, उन्होंने SMT 10 नहीं दिया है और डायरेक्ट DRC 01 दे दिया है। तो इसके हिसाब से क्या कोई ऑर्डर होता है तो क्या उसको हम चैलेंज कर सकते हैं अपील में, या नल और वॉइड ऐसे ऑर्डर मतलब?
राइट। तो मैंने प्रेजेंटेशन में जो आपको बताया कि बेसिकली 73 का पावर तभी एक्सरसाइज होता है जब ऑफिसर ये आइडेंटिफाई करते हैं कि सही में कोई टैक्स का पेमेंट नहीं हुआ या कोई आईटीसी गलत। रिटर्न स्क्रूटिनी के बेस पे ये नतीजे पे नहीं आ सकते। रिटर्न स्क्रूटिनी के बाद सेक्शन 61 के तहत उनको टैक्स पेयर से रिप्लाई मंगवाना चाहिए, उसके बाद वो ये नतीजे पे आ सकते हैं कि आइडेंटिफाइबल क्रेडिट कोई है जो गलत लिया है या आइडेंटिफाइबल आउटपुट टैक्स जो नहीं पे किया है, उसके बाद 73(1) का पावर एक्सरसाइज कर सकते हैं। उसके लिए मैंने आपको 2 डिसीजन भी दिए, एक मद्रास हाईकोर्ट का डिसीजन दिया और एक गुवाहाटी हाईकोर्ट का इंटरिम ऑर्डर है पेप्सिको होल्डिंग्स का। इसमें हाईकोर्ट्स ये कह रहे हैं कि इस सिचुएशन में रिटर्न स्क्रूटिनी के बेस पे यदि आप कोई डिमांड रिकवर करना चाह रहे हैं तो सेक्शन 61 पहले जाना पड़ेगा और उसके बाद 73 पे आना। तो ये ग्राउंड आप लीजिए जो भी आप रिप्लाई देंगे।
Right, sir. So last 2-3 questions considering the time constraint. Chetan ji, I just request you to be kindly brief with the question. Chetan, sir, unmute yourself, please.
Yes, ma'am. Yes. Good evening, sir. So my question is, what is the best remedy available to us against the orders wherein 100% of ITC has been rejected on the ground stating that you have not discharged your burden under section 155, during scrutiny proceedings, despite the fact that all ITC is being reflected in my 2A. Whether I should go for rectification of that order, appellate or writ jurisdiction, sir.
See, number one, rectification, practically we have experienced that nothing happens. You can, it's still, despite the fact that there is a provision in law, if I'm not wrong, section 161, but nothing happens in that provision.
Yes.
So that is ruled out. Appeal and writ. Now, in this situation, writ can only be entertained, as I indicated, that only if you are able to demonstrate that either natural justice has not happened. Now, in this situation, if your facts are like this, that you have given all the evidence to indicate, because section 155 burden can be discharged only if you are able to submit A, the copy of invoices basis which you have taken the credit, B, indicate that you have actually received the goods or services, and indicate that C, indicate that you have filed the returns, and D, indicate that the output tax has been admitted by the supplier. So if this is the case, and if this has been submitted and completely ignored, and an order unilaterally has been passed, then perhaps you can exercise the writ remedy. In a case where this has not been submitted, you are only saying that based on 2A only your claim should have been entertained and 155 burden should have been discharged. To my mind, that would not be adequate to discharge that burden. So in any case, you do not still lose the case, but better would be the appellate remedy, where you can give all the available evidences to justify your claim. That would be a better approach.
Right, Sandeep sir. Now, how you allow us to proceed? Should we?
I
Are we
think
allowed to
there,
take one?
I think there are 3 hands raised. One.
Yes, 3 hands raised. So
let's take the questions. People have been waiting for it.
Right, 3. So last 3 questions we are going to take. Abhay sir, the first one coming from Anurag Gupta ji. Anurag Gupta ji, kindly unmute yourself, please. He's taking a little time. Okay, Anurag ji. Yes, Anurag ji, please ask.
Anurag ji, boliye.
I think so. There is some issue with his network. He's on mute again. Anurag ji, meanwhile, yeah.
I think there is some issue with his.
Yeah, we can meanwhile proceed with Rahul Deo Patel ji. Sir, kindly unmute yourself and ask the question.
Hello, am I audible?
Yes, you are audible.
Abhay, there are 2 questions. Number 1, I already given to you chat box. It is related to instruction letter number CCT 0707 dated 11/10/23.
Right.
Gujarat. Yeah. So is it applicable for 18-19 also?
See, technically it is not applicable, but see, it was an instruction basically to dilute the impact of these notices, and the instruction had very good reasonable grounds to say that parallel proceedings cannot be happened. Once proceedings have been closed, again cannot be initiated. So all those principles still survive, and hopefully what I have learned is that hopefully we will have that instruction soon for 18-19. So I think your
related to this only, the second question is that for 18-19 ASMT 10 were issued, subsequently DARC 01A were issued, nothing was decided, no ASMT 12 was received. Okay. Right. Now SCN is received under 73.
Right.
See, on so that, I have raised this question, this particular instruction in my reply. Okay, these are the issues. The instruction is given by you are issuing show cause notice on the very same grounds.
Right. So you are absolutely right in saying that once proceeding has already been initiated under 61, followed by DRC 01A, certainly now those proceedings have to be carried forward. Parallel proceeding in terms of such notices under 73, to my mind, should be withdrawn or taken back, or should be left as it is.
Okay. Thank you.
All right, sir. Thank you. Now followed by Sri Ram Ajiwalji. Sir, kindly unmute yourself and ask the question.
Hello.
You're audible, sir. Please continue.
सर नोटिस इशू किया गया स्टेट जीएसटी ऑफिस के द्वारा और उसमें दिन मेंशन नहीं है तो क्या नोटिस वैलिड नोटिस है?
देखिए, डीन वाला इशू बेसिकली ऐसा है कि डीन कंपलसरी है, लॉ में नहीं लिखा है, बट जो बोर्ड के इंस्ट्रक्शन है उसके बेसिस पे हम कह रहे हैं। फाइनेंस मिनिस्टर ने खुद पब्लिकली ये एक्नोलेज किया हुआ है कि डीन के बिना का यदि कम्युनिकेशन आपके पास आता है तो वो आप इनवैलिड गिन सकते हैं। हाल ही में डेवलपमेंट उसमें कुछ ऐसा हुआ है कि इनकम टैक्स में ऐसी सेम जो प्रोविजंस है और ऐसी सेम सिचुएशन है, वहां पे सुप्रीम कोर्ट ने अभी एक केस में स्टे दिया गया है हाई कोर्ट के डिसीजन को, जहां हाई कोर्ट ने ये डिक्लेयर किया था कि दिन के बिना का कम्युनिकेशन इनवैलिड है। उसको से फाइनल डिसीजन हम नहीं मान सकते अभी, लेकिन
अच्छा।
हमारे लिए उससे बड़ा चैलेंज क्या है, सेक्शन 160 का सबसेक्शन 1 जो मैंने इनिशियली आपको बताया, जिसमें इस तरह से प्रोविजन पार्लियामेंट ने बनाई हुई है कि कोई भी इन सब्सटेंस यदि प्रोसीडिंग लॉ के हिसाब से हुए हैं तो फिर इस तरह के टेक्निकलिटीज के बेस पे वो प्रोसीडिंग्स को इनवैलिड नहीं डिक्लेयर किया जा सकता। सो जो डीन वाला जो मैटर है उसमें मैं नहीं समझता कि उसमें ज्यादा अब होप रख सकते हैं कि यही बेस पे हम कंटेस्ट कर सकते हैं। आपको मैरिट जाना पड़ेगा।
सेकंड क्वेश्चन ये है सर, जैसे मान लीजिए कि मेल में ASMT 10 आया और पर DRC 01 ए भी जो है मेल में आया, SSC ने देखा नहीं। अभी सॉफ्टवेयर नोटिस भी जो आपको मेल में आया, तो इसके लिए क्या करना चाहिए?
देखिए, इसमें सेक्शन 169 सबसेक्शन 1 अलाउ करता है ईमेल से करस्पॉन्डेंस करने का, लेकिन ये ईमेल आपका जो रजिस्ट्रेशन आपने लिया है, जो रजिस्टर्ड सर्टिफिकेट है, उसमें जो ईमेल आपने दिया हुआ है उसी ईमेल पे आना चाहिए, नंबर 1। और नंबर 2, वो ऑफिसर के ऑफिशियल ईमेल आईडी से आना चाहिए, जो गवर्नमेंट का ईमेल है।
अच्छा।
कई बार हमने देखा हुआ है कि ऑफिसर्स के जो ईमेल आईडीज होते हैं वो जो गवर्नमेंट ने दिए होते हैं उससे नहीं भेज रहे, वो प्राइवेट ईमेल आईडी से भेज। यदि ये सिचुएशन है तो इसको हम वैलिड सर्विस नहीं गिन सकते। दूसरा, यदि आपके वो ईमेल आईडी पे आया हुआ है जो आपके GSTN पोर्टल पे, जो आपके रजिस्ट्रेशन में शो नहीं हो रहा, तो उसमें भी आप ये कह सकते हैं कि ये वैलिड सर्विस नहीं। तो ये आप खामियां देखिए, यदि ये मिलती है तो आप ये ग्राउंड ले सकते हैं।
अच्छा, ओके, थैंक यू सर।
Sir, I think so. Anuragji is unable to unmute himself, but he has put the query in the chat box. So if you permit, this is the last query for the session. If I can read that for you.
Surely.
Right. Last date of issue notice under 73 for 1718 was 30th September 23. If any notice issued after that, all notices are invalid as per law. If any officer issue ASMT 10 and last date of submission of notice of ASMT 10 is after 1st October 23 and after October 23, officer issued 73 in continuous proceedings of ASMT 10. So notice under 73 is valid or invalid?
No, certainly invalid, because 73 anyway is the pivotal provision under which the department has to issue the notice if they want to recover any dues. Forget about ASMT 10, whether ASMT 10 was issued or not issued, or issued and after 1st October it was ultimately decided. Irrespective of that fact, whatever be the case for 1718 under 73, no show cause notice can sustain if it is issued after 30th September. So if the notice is issued certainly after 30th September, as the facts seem to indicate, those notices to my mind are invalid. They are contrary to 73, and therefore the order which has been passed by virtue of those notices. That is why I discussed the principle of fruits of poisonous tree, where ultimately if the notice is invalid, then all the proceedings subsequent to, and this defect is not cured by 160. Also, please keep this aspect in mind, and therefore to my mind this is certainly a case where proceedings should not survive.
Right, sir. So with this, we come to an end of a marathon session today. Sandeep, sir, your words for Abhay.
Well, I think I'm not left with any words to say anything further in this on this aspect. Mr. Desai has taken all the pains to, I think, touch each and every issue. I had noted down few points in my notebook that I would definitely be touching upon at the end. But by the time the session has ended, I think all those issues have also been taken up and considered and discussed in this session. And as you said, it's already a very long session, a marathon session. And kudos to Mr. Desai for having handled this so well. looking forward to, of course, see him in future on many occasions. We are going to have a very close association, not on virtually, but I think we are going to have physically as well. So with these words, I would request Aanchal ji to please take the things further, and let's go towards the end of this session. Thank you so much.
Certainly, sir. Thank you so much, Sandeep sir, for your words. And Abhay sir, what to say? A marathon session taken so well, so calm, yet so composed. And we are so enlightened with the thorough knowledge you provided in the session. And we all will be thankful to have your PPT. And that will be shared through the platform of AIFTP to all the participants and also to those who could not join the session today. Thank you so much, Abhay sir, for being a part of it and accepting our invitation. As Sandeep sir said, that we will be in touch in the regular future too. And also to all the participants, I can see on my screen, OP Shukla sir is there, Ranjit ji is there, Jain sir is there. So thank you so much to him and to all the and to all the participants for being with us in the first virtual session of AIFTP NZ GST Study Circle. Thank you so much for being there with us, and we will continue the programs in the time to come. Sandeep ji being the vibrant chairman and CA Rajender ji in absentia. So I take this permission that yes, we are going to have lots of energetic sessions in the times to come. So stay tuned. Thank you so much for the day. And we now come to the end of the session. Thank you.
Thank you, sir.